that information? Do I need emails? Do I need information about Sarakasi happening this weekend? Just because you have my email address doesn't mean that you need to send me all that, messaging. But it boils down to a couple of things. And I'm sorry to say this because all of us are guilty of these issues. Number one, laziness. Number two, we think spray and pray. Yeah? Just spray messages, something will stick on the wall. Number three, we just simply have no respect to the current dispensation. And that's why we are getting to a point where we are starting to say the Office of the Data Protection Commissioner is becoming activist. No, guys simply never had an out where to go before. Now, all of a sudden, guys say, oh, I can report you. Wait a minute, utaniona. So it's time for us to just rejig our thinking for the betterment of our own brands, by the way. Because, I mean, what's the point of your brand being dragged around by someone just because you sent him and that they don't want? I mean, it may sound trivial, but it's not. Back to you, thanks.
Ref, you wanted to say something?
Oh, just to say I completely agree about this. It's a subtle but important difference, the power of defaults. If your default opted in, or you default have to opt in because you're opted out. And that is, in open finance, the default is opt out. So that's, I think, another benefit, right, of this, right? You're not participating in open finance unless you actively and specifically consent. So it could refresh the standards we hold ourselves to. Sorry.
Thank you very much. I think we need to wrap it up. I don't think we have a lot more to cover beyond this, but there will be discussions going on in the following panels and during the day. If you still have questions, we are still around. I believe the participants, the panelists are still around. During the tea break, you can network, ask specific questions, raise the issues. This is just the beginning of a conversation and a journey. So the discussion here is what should we do as we make the journey and what would be a good starting point for the journey going forward. And if possible, can we agree on certain principles as we go ahead so that all of us are going in the same direction? Thank you very much for listening to the panels. And thank you very much to the panelists for your insights. I know some of the discussions started becoming very interesting, but I hope the fervor with which you brought your comments, you'll bring to the next panels as well. Thank you very much. Thank you.
What? Sorry, if you don't mind, just come back to the stage. Photographer? Are we doing photographs? Okay, we can maybe do that after the break if required. So we'll be breaking for coffee shortly or tea break, but before we go, on your table you will see a QR code. We would like you to use that QR code to fill out that particular form before you proceed out for our coffee break. We'll be resuming here at 11 o'clock, so 30 minutes from now. So please, actually that's less, about 20, 23 minutes. So please use the QR code on your table to fill out. And once you're done, you can proceed to have a coffee or tea. Thank you so much. Okay, again, please fill out your forms on the Menti. Use the QR code on the table. Would appreciate if you can do this before you leave for your tea break. I wanted us to get the. Fill out your Menti using the form on your table, the QR code on your table, then proceed for tea. Don't seem to see Victor. So maybe just proceed as you are, and then we'll see if we can get Victor later.
Sorry, I didn't throw a lot more questions because I think it's going to us data. People started now having yeah, we managed to put it. And some of them were very repetitive. When you ask the question, you answer the next one. So asking the same question. Part of the discussion actually we have with the central bank is that we want to establish a conversation with them on how this should progress. And then there's chaos. Yeah. Yeah. There's an element of inclusion where you need people to come in together. For the people who are not on the table to keep it.
with a financial management tool, you want the live feed of their payments data because you're helping them allocate across their different accounts, and you're helping them use that to get wholesale inventory purchase financing, things like that. So it's really going to differ. Then the third one, so this one's interesting, product and market insights data. It started in some of the early open finance ones. They included, locations of bank branches, agent points in the case of Brazil, what products are on offer. And the idea originally was more, those were to test the functionality of sharing data information in a low-risk environment. But it actually has some good use. And I would say in particular, me as a consumer, I don't know about you, sometimes it's hard to compare apples to apples in finance. And so having up-to-date and accurate product terms and conditions, you can now, you're a smart tech company, you can create a live loan cost comparison tool for consumers. I mean, imagine that if you don't have to go to 10 websites to check what the loan terms are. It's one click, one-stop shopping. So these are generally the buckets of data that are included. And I want to, we can circle back at the end. I'm going to ask you all what data do you particularly want or would find most useful. So keep these in mind when we talk about that at the end of this session. Next slide, please. There we go. So this is an oversimplified, but I think fairly accurate summary of what we heard from you all, that the current environment is fragmented and inconsistent. Does that resonate with some experiences in the room? And so let's talk about each of those a little bit. First, the formats, right? Different entities use different formats. Some providers, I've had this experience with credit bureaus, some providers don't even collect certain mandatory data points in a credit bureau. This was a problem in Uganda when digital lending entered. And so you can't even really comply. And so this creates problems where different formats for similar data, and it makes it really hard to merge the data. I also heard this particular challenge with what people were calling alias data or identity data, that with the hashing of phone numbers, and I think we heard this, Vikram mentioned it, I think, about reconciling to do refunds. It's hard to match people to the SIM, which is one of the more universal identifiers we have. Inconsistent data sharing. So this is different rules or submitting in a timely or less timely manner, everyone kind of playing jazz, by their own rules, even where you have certain standards. And I think we've seen that in some of the past experiences in credit information sharing. Then integration processes, and this was mentioned by many of you already, that there's some uncertainty and concerns about data protection and data protection compliance when you're setting up these partnerships, where now you're sharing data, and are we complying with all the standards? And it was interesting to talk to people. There's a lot of pain points in the integration processes, and this is not saying we should reduce data protection standards at all, but it's saying that in open finance we may be able to standardize what is compliance, and also I think the connectivity, you're not negotiating bilateral agreements with everyone, right? Some open finance systems like the EU are planning on standardized service level agreements, things like that. I mean, think about how much easier that would make the process. Next slide. So I was getting at a bit of this already, but when we think about, okay, those are pain points you found, what might open finance, how do the models address these pain points? And the first is this accreditation and vetting process, right? So if we do this right, it's going to be easier to trust entities in the open finance ecosystem because you will know specifically what thresholds they passed. You won't have to develop your own you may have additional compliance checklists, but you won't have to develop your own internal ones for most of the data security aspects. And that will be developed, I think it would be developed in lockstep with the Office of the Data Protection Commissioner. You'll have clear, standardized data templates. That's just a given, right? There will be a template for everything that is shared in Open Finance. That'll just make it so much easier to merge and to analyze. Standardized rules and compliance, right? So where the rules of the road are better defined, there's less car crashes or less people driving into ditches. And so you'll see greater standardization of compliance, and with the monitoring, you'll be able to know, okay, this provider's API has a failure rate of 80%. They need to fix that. And I'll show you how in India they monitor that in a later session. And the standard connectivity requirements, like I mentioned. I think reduce redundancies, make it easier to create commercial arrangements. Next slide. Okay, so what's the data you all want? I don't imagine this is too surprising, and I'm going to ask you, if this aligns with your feelings and your priorities. But when we asked you, so payments and mobile money account data was the top one that people thought they really would benefit from accessing through Open Finance. And it makes sense because Kenya is such a cash-light economy now. I love when I come here. I never get shillings anymore. And it's a wonderful experience because I travel a lot, and that's not the case everywhere. So obviously this, payments is sort of the oil that runs this digital economy, and so everyone wants to have access to that. It was interesting to me that the second most popular was actually the ID and demographic data, and I understand that when I've heard from you all about the challenges of KYC and the risk and proper risk management. And then, of course, deposit account data and credit data. Then lower, you see investment data, location data. Location data, I would worry about privacy issues, because that can be particularly sensitive. I think that's like maybe a nice to have in phase one. But this is sort of aligns with what we're expecting, I think, with the pain points we heard from you all. Next slide. So I want to ask you all, we can just do an open discussion. First, do these data challenges align with your experiences? What are other challenges we've experienced with either data access or utilization or harmonization? I want to hear about the types of data you would like to access. Does that graph from the slide prior resonate? What might you do with better data of these types? I'd love to hear cool ideas of, products or innovations or ways services could be improved, because that's what we're really here for. And then, what would you say would be the most useful data to use in Open Finance? So why don't we start with the first one? Does anyone want to share? We talked about the inconsistent formats, inconsistent sharing practices, data integration, service level agreement challenges. Anyone have any particular specific challenges they've faced on any of those themes in terms of sharing or accessing data?
Microphone here. Anyone needs a microphone? We're here.
Excellent, yeah. I think we have a gentleman. Oh, you got one? Great.
Good morning.
Good morning.
My name is Edna from Metropole CRB, and I can speak from experience from the CRB end. When it comes to data access and quality, you find, I think the main challenge is how data sits at the data provider end. Data sits in silos, so you have KYC data in one portal and then account information in another. So when they are sharing that information, you find even extracting is an issue. So I think one of the things is with most banks, institutions adapting to real-time kind of data, also ensure that at the back of their mind, when it comes to data sharing with the CRB, can they ensure that they even automate that process? Yeah. With the new data submission template, we're really looking forward to having API kind of data submission. Previously, it was a file, end of day submission, but now we have seen adoption of API where we are able to get real time, but it's only like 5% that have adopted it. So how can we ensure that we get to 100 so that when it comes to real-time access to information, whatever we give to everyone else is real-time? Yeah.
Thanks. Yeah, and I would think it will be API-based. I don't think you want to do file sharing in this. And we had one right here, this gentleman.
Good morning. My name is Kibe. I'm from Cladify, a fintech that is bringing in the element of cash flow data for credit scoring. And I think our biggest issue has been actually access. Like, we need cash flow data from banks and mobile money companies, and some don't have APIs, like absolutely no APIs. And I think that the first of all is access, and then maybe you can worry about quality and other things later. Yeah.
And I imagine this is going to be a challenge. There's going to be some institutions in covered sectors of open finance that are less ready than others. That was a thing that was raised in Australia when they did an impact evaluation of open finance. But one thing that has been helpful, and I think Kenya's similar, there's a strong aggregator economy. And so I think aggregators are continuing to be really important. For some will build in-house, but those who you've experienced don't really have the sufficient APIs. I expect we'll see aggregators build some standardized solutions, or I hope so. Another challenge, yeah.
Yeah, my name is Charles Kinyanjui. I work with EcoBank. Mine is actually an area that is quite interesting. Ideally in the part of, if for instance you have a bench where you're actually doing a fintech collaboration sort of thing. And here I'm talking on broad spectrum. I'll talk of insurance, the agri-tech and net tech. You find there's this commercialization concern, especially when it comes to abridging data. And it's a make or breaker because the business interest, I cover the fintech side, I cover the partnership, and I'm an advocate of the fintechs. But then if an entity like bancassurance feels threatened because of the commercial concerns on sharing some particular customer information with the fintech, it becomes a breaker for any commercial conversation.
Yeah, the willingness, it's not just the technical things, it's the willingness. I want to ask Jared, and then Ploon, you had a interesting sort of challenge/question you had raised, and I'd love to just have you share.
Thank you. Current data challenges, one of them would be just how to get a consent that is all-encompassing, because we are talking about an open finance environment, and my data needs to be, I need to give consent for a whole range of data sources and data types. So what does an open finance consent look like? That's something that bothers me, to see how that would work. At some point, I would like also to share that some of the issues that you have raised in an earlier slide, especially around the challenges to do with how data is collected and how the inconsistencies, are things that credit bureaus have gone through with a lot of intensity. We've been doing this for more than 10 years, and a lot of experience has been gained, and some of those challenges are real, but there are solutions. That's the beautiful thing about it. There are solutions to the inconsistencies in the processes, inconsistencies in the formats. It's not difficult, it's not rocket science, but it can be done. But the real question I had here was, what does an open finance consent look like?
We'll just take 5 more minutes of questions.
Yeah,
We actually have to break for lunch early.
Well, no, we have a panel discussion at 11:30.
Yeah, I'm saying we want to allow enough time because we're going to be
absolutely.
leaving early.
Yeah,
Okay.
yeah. So to the second part here, and then the question, I want to plug that I think you've published now some of the findings on your data standardization process, right? Because there was inconsistencies and there's been incredible improvement. And so I think you're right. We can learn a lot from the CRB journey, and we need to think about how is the credit information sharing system that exists part of the solution that is open finance. And this consent thing is one of the tricky things we'll have to figure out, because there's a certain, there's certain rules around sharing of credit information, right? As we mentioned, you're allowed to share it. The consumer can't really stop the sharing of it if it's part of the process of getting a loan. And the consent for sharing credit bureau data might be different than the consent in open finance for sharing data when you're helping a business manage a financial dashboard. And that might need to be recurring, real-time or daily access versus monthly access. Mortgages would be monthly. So there's all these different data types, and we kind of are going to have to create these different consent, sort of proportional consent, and you have to create things like recurring consent. So like, for example, in a lot of these countries, they say, okay, you can do this, this live or this daily pulling of this business data that this SME authorized. But every 6 months, you have to do a full reconsent to that. Because maybe they forgot about, move on to another service, and you're still pulling the little data. So it's a really tricky detail. Plune, yeah.
Thanks, Rif. I think for me, from my experience both at PesaLink and my previous work, the biggest challenge would be on data accuracy. I think this is a challenge faced by most financial institutions that, go to my year account that I opened at COP when I was, 18?
Yeah.
And the kind of data you find there and what you find at my current bank is completely different, and it's different across institutions.
Yeah.
So how to manage that so that you're not looking at 3 plunes is a big concern.
Yeah.
Yeah, because I'm still the same person. And of course, the second one is how do you, it's sort of like a concern.
Yeah.
There's data minimization, but you still want to collect as much information as possible.
Yeah.
And we've talked about innovation.
Yeah.
So where do you draw the line? So, and then the other one, especially at PesaLink where I currently work, is on risk allocation. Yeah. What happens when something goes wrong? I know the Data Protection Act does specify, but sometimes it's a bit hazy. So for me, at PesaLink, I have to make a decision, how much information am I sharing with whoever, right?
Absolutely.
So I think we need to think about that. So what I'm really hoping to hear is, from a governance perspective, how is that managed, and especially for markets that have already figured this out?
Yeah.
What's the governance structure or framework around that? Who sets the standards?
Yeah.
Who says these are the agreed standards?
Yeah.
And who can you share with? Who sets the rules for participation or not? Yeah. I don't know. So it would be very interesting to just see specific lessons from specific countries on what, how those countries have already figured that out.
Absolutely, yeah. Who can you share with? What can you share with? And I think one point you mentioned related to this is how far back can you look, right? And so there's a time horizon for this type of data. Maybe it's a year, maybe it's 2 years, who knows? And you also touched on something we'll discuss after lunch. Liability rules is one of the most important initial rules to set in open finance. Who is responsible when, and how do you determine responsibility when things go wrong? Because things will go wrong. Because you need to have that assurance that if you share properly in open finance to someone else, another provider, and then they share it with a third party that does harassment, collections, or misuses the data, you're not liable. You shared it in the restricted environment. They're the ones, who brought it out into the jungle, and so that needs to be clear. Maybe.
One more question. There's a gentleman there, then we can move to the panel.
Yeah.
My name is Ronald Okumu. I'm the MD of AI Connect Limited. So mine is just a statement. We're doing some work with the Central Bank of Mauritius in open finance. And what we're seeing is exactly what you're saying. There's some case studies that can be used. But what we're seeing is a data platform with embedded AI algorithms. So for example, in your case, there's something called contextual AI, which basically maintains the rights in terms of data privacy and the rest. Yeah. And the algorithms are trained to learn from that kind of context. So happy to provide some learnings from at least 8 other markets.
I'd be very curious on that, in particular how like how do you manage the interest of an AI model to continually train itself with the privacy and the restrictions on usage? Because AI, there's a lot of upside and a lot of downside. Yeah, that's fascinating. I would love to dive into that later as well. All right, I think I'm being given the boot.
Well, thank you, Rafe. We love hearing from you. And I think we can hear that really the frameworks are critical to ensuring that as we share data, that it's handled in the right manner through frameworks that actually support the process. So thank you so much for that, Rafe. We'll now go into our panel, our second panel of the day. We will talk about Kenya's data sharing ecosystem, current practices and opportunities. This discussion, again, is going to sort of dig into some of those specifics. Moderating this session is Rosemary Koech, Director of Regulatory Affairs at AFIC. Rosemary, over to you.
Asante sana Moses. I truly appreciate this session, and I'm going to ask my panelists to come up here. I'll mention them one by one. First, we have Kamau Kunyiha, Karibu sana, from Credit Info. We also have Anstella Bumbi, Karibu sana, from Tala. Anywhere. We also have Valerie from KCB, Karibu sana, Valentine. And we have Charles Kinyanjui from EcoBank. So Ali, this is what gender balance looks like, eh? just for clarity. Asante. No, this is what balance looks like. So glad to be here. I'm the director in charge of regulatory affairs and policy. Basically what I do is they give me all the big documents, I read them and I figure out what it means for the fintech industry, the banking industry, and what position is it going to be for AFIC. Fun work, right? So I'll have everyone introduce themselves for a second before we jump into the questions. Asante. No, just balance it.
Good morning, everyone. My name is Kamau Kunyiha. I'm the regional CEO for Credit Info for East and Southern Africa. That covers Kenya, Uganda, Tanzania, and Namibia in the south. But as a business, we're a global brand covering over 30 different markets, 40 now probably. In Africa, we've got operations where we're either providing bureau services directly licensed by the central bank or with partners who we're supporting with technology and our value-added services to over 25 different markets in Africa. Yeah.
Asante.
Hello, everyone. Valentine Wamboi from KCB Group. I look after partnerships and new ventures, specifically focus on what are the new emerging opportunities, places where the bank should be playing, specifically working closely with fintech, startups, and seeing how the bank becomes an enabler and player in that ecosystem. Happy to be here.
Hello, everyone. My name is Mumbi. I'm the general manager at Tala. Tala is a fintech company operating across how many continents? 3 continents so far. So Kenya, we have a presence in the Philippines, Mexico, and India, serving 10 million customers. And our focus is actually on democratizing access to financial services. So we started with credit, but right now we're really thinking about personal finance as a whole, and really thinking about how do we open up access to services for financial services for consumers who are currently left out of formal financial ecosystems. Looking forward to the discussion. Thanks.
Good morning. My name is Charles Kinyanjui. I'm the head of EcoBank's FinTech desk here in Kenya. EcoBank is a Pan-African bank headquartered in Togo. We are in 35 African countries. The FinTech desk was, I'd call it a leverage to ensure that we enable financial technology companies as well as tech-enabled. I'm very specific on that because not everybody is in the finance kind of books. To be able to leverage on the Pan-African presence that we have to ensure trade and, of course, to get into the diverse kind of African outreach or outprints that we have. Pleasure to be here. Thank you.
Asante sana. And you can see my panel is comprised of people who want to work with each other, aspire to work with each other, are forced to work with each other, CRB people, not mentioning names. But my question is, what is your experience? I want each of you to describe the state of data sharing in Kenya's financial sector to me and to your team here in one word or one phrase. And I'll want to ask, why have you chosen that word or phrase? So if it's too hard, you can first start with the word, then I'll come back to the why. But yeah, Kamau, Pole, you're going first.
I think some of the points had been mentioned earlier by Ref when you're speaking, but I would say limited would be one word to use.
Limited.
Yeah.
Rapporteur, that's a big word, limited. I think we should have had a word cloud at this point, but it's okay. Yeah? Limited and then?
I'd say timely. Timely, and I'll say why. So in the Genesis, I think we joke about this and say it's not about when do partnerships happen, it's there already happening. I think the conversation today is around what's been the impact, the output of that. In this whole I'd say almost 2 years, 3 years journey that's happened in the financial services industry, you've gotten into open banking. Okay, so banks have put out their APIs, and those are getting consumed by fintech startups, etc. Okay, fine. We're moving towards embedded finance, and we're thinking about, okay, how do those things work between the bank and the partner, right? And one of the big blockers, the big challenges that has been there is always around data sharing. Whose data is it? Who controls the data? Yes, we have guardrails that have come in place in terms of the policies, but we've not addressed the root cause of how do we effectively roll out this without impacting, one, the customer from a consumer protection perspective, but then two, curtailing the possibilities of innovation just because, hey, I can't share my data, or I don't like how you're sharing your data, or we can only go this far. So it's a timely conversation.
Asante sana. And Stella?
I think mine is probably very similar to Kamau. We can say a phrase, it doesn't have to be a word. Okay. I think my current status is we're at competition versus instead of collaboration. I do think that I had seen a period probably 3 years back where there was starting to be a lot of openness from banks. And I'm not attacking the banks here. I think they're the friendliest banks. But I would say we've seen a lot of openness from the banks. Then something shifted, and I know we'll talk about it. Something massively shifted in the last 2 years. And we've seen everyone close their doors again. Good luck finding APIs anywhere. And I would say if you talk to any bank, they'll tell you, oh, this is our customer, this is our data. And at the end of the day, I ask myself, are we losing more by not collaborating? Because at the end of the day, to what Ali was saying earlier, there's no single piece of data that gives you the full picture of the customer. So provided you're not sharing, you're also missing out. And I think we spend too much time talking about what we stand to lose instead of what we stand to gain, and I think that's a big opportunity.
Sana? I'm so happy I'm not wearing my banking hat today. So Charles, take one for the team.
Yeah, I'd say accelerating, and I'll give some examples. For the first time, maybe in quite some years, for those who know me, I've been starting up this fintech ecosystem within the banking cycles. And for the first time ever, I've actually seen a lot of inquiries on accessing sandboxes, yeah? And this sandbox thing, I know, like, let's say 5 years ago, I worked where we were actually sending it on PDF documents. I was listening online as I was driving, and I remember, was it Ali saying, Daraja actually, they taught us the lessons in terms of how we should spearhead this kind of conversation. The other thing is that, I'd put it critically, I felt we dwelled so much, especially towards, let's say, post-COVID, on payments. And we were sort of blinded because everybody that thought of doing any business was looking at, the kind of revenues they're bringing, this thing of customer ownership and all. But then I'm feeling the conversation is moving towards a bit of elevated finance, and the acceleration is towards areas that were a bit difficult to disrupt. I'm talking about insurance, I'm talking about agriculture, health, and education. And I'm seeing a lot of people, because I'll give a simple analogy, and I know Felix is here, maybe he understands better. When it comes to agric, why we are shy as banks in terms of lending to farmers is because you understand the level of farming that we do. Two is we depend so much on rain. We call it rain-fed agriculture. No bank wants to touch the kind of weather we've been seeing. Yeah, last night it's hot. Today it's raining in the morning. You don't know what will happen in the afternoon. So this kind of inconsistency made us a bit shy of this. But then there are those tech-led. You remember what I introduced? Tech-led enablers that are bringing data consistent to what the farmers are doing, what they're generating in outputs, and how we can manage their risks, presenting it to banks, and that way we can make sure that we innovate and create products based on that. So I think acceleration would be my word. It's accelerating.
Sawa. And I hope my audience has had the cognitive dissonance in their responses. The bankers are using words like timely. Basically, she's saying we are getting there. Yeah? And then Charles on the other end talked about elevated finance, accelerated. His word was accelerated. Yet if you listen to the partners who are aspiring to be with them, they talk about limited, yeah? and limited times 2. Or was it limited squared? I don't know how we multiply this. Yeah, and it shows a difference in how we're interpreting this. But that's exactly why AFIC, FSD, and KBA came together. Because we realized that we have our own interpretations of open finance, our own feelings, yet we all know what we could do better. I sense that Kamau wants to respond. Yes, he hadn't given us his explanation. So over to you.
Yeah, thank you. As a good student, you said one word.
Very well done.
So why do I say, I mean, limited in the sense that, so as a CRB, we've been on this journey probably 20 years plus, but the first bureau licensed 15 years ago, 2010, and we are hardly scratching the surface. Limited in very, limited or fragmented, whichever word you want to use, you could use any of those. Limited, fragmented in the sense that we are regulated by a regulator whose only interest and concern is the banks, yet credit expands beyond just banks. So you've got SACCOs, microfinance, you've got so many different forms of credit that are in the market which don't have access to this information sharing mechanism because there is no policy provider or arm that is overseeing to give direction on how for them to share that data. Then even within the banks, and we've had some of it here, and my colleague from the CRB mentioned it as well, and it's interesting we're talking about open finance. There's lack of openness within the people sharing the data because there's a competitive feel that is there. It's don't want to be too open because my customer could be taken. Yet we've come from very humble beginnings of only sharing negative data to sharing full file data on credit. But I mean, it's going on 15 years, like I said, in the right direction, but too slow to full open finance. And there were great benefits that were seen from the time we moved from negative data to full file data. So in the beginning, I think, I'm talking about early 2010 to 2013, around there, the Bureau probably had records on about 700,000 individuals. Today, with full file reporting, we've got data on 24 million. Now, there are different aspects, but then it just tells you how you're able to, and because of that, I mean, Lenders are able to reach to more people. So that openness is also very necessary. So the limitations, if they're removed, the opportunities expound.
Amazing. And I just want to ask, are those natural persons or including companies?
Those are individuals.
Individuals.
Companies, what we call non-individuals, I think is just over 350K.
Okay.
Non-individuals, so businesses.
Thank you so much for that. So my question then to all of you. In the presentation by Raf earlier, we saw several key challenges to data sharing. And this now goes to the technical part. Formats, compliance, integrations. In your experience, which of these has been the most challenging? For those people who said limited, what has been the most, this is your chance to fungua roho. Sema iwatoke to the bankers on the panel in the room, yeah? What have you, and have you found any solutions that have worked? I think Ali said we have Chatham House rules, so we can actually be very open about it. So I'll start with Charles.
So where you sit is you wear two faces. You play advocacy, because to me I'm the advocate for the fintech, as well as they deal with the commercial teams. But then there's the other side you have to look at. There's, the DPC, the CBK, you have to look at these regulators. But the biggest one that we have as a bank, I'd say, is CBK. So we have to file all these notions and all these partnerships. I think the biggest hurdle that I see from where I sit is actually the biggest concern on compliance. There's this question of residency which keeps popping up. And I don't know, for some reason, a lot of us, technically we've chosen, okay, I'll choose cloud and maybe we'll do our access points through these kind of platforms. So technically, I think that conversation needs to be spearheaded in a way, either to warm up some confidence or some assurance in terms of access, what can be accessed, what limitations can be built into it, and how we should step forward in terms of regular reviews into access rights and maybe the kind of controls to what level of data anyone is seeing within that kind of ecosystem. So for me, I think compliance is the biggest, I'd call it, not a hurdle as such, but a bigger step that we need to cross. Yeah.
And I'm going to have, make it a bit more interactive. Audience, just put your hands up. Do you use Microsoft Cloud, Office 365? Do you use Google? How do you do your emails? Put your hands up if you fall into any of those categories. Hands up, simple, simple, simple. Perfect, almost at 99%. The ship has sailed. The data is already sitting somewhere that is not here. Just reflect on it. That's why you pass all your emails. That's why you attach the Excel sheets. That's why you do the Google Cloud storage. I'm not speaking to any regulator, but yeah, that's where we're at. And Stella, over to you. I said, no. Yeah.
I think I can, if I can.
Yeah.
I think the thing is, it's not actually the residency might, the questions you need to answer. Ideally, if I was talking like, let's say, for instance, I have a car dealership, or that is a fintech I'm talking to, and I've actually automated it. So they're dealing on a KYC kind of prospect for these customers that are hitting their platform. But in the back end, they require some bit of financing, right? So if you approach the regulatory avenue, they'll ask you, so where does the bank kick in? Because you're provisioning for loans or credit facilities to these end customers. How do you share this KYC documentation? Who retains what? And how is it used, stored, and of course, obfuscated if for some reason the person dropped off, you're not interested anymore. So if you look at it, the bit of usage is where it becomes very complex to answer. Two, the regulator is very keen on you trying to, I'd call it, delegate your functions, yeah? For instance, banks are known to facilitate credit. So at times they keep asking you, so who will be doing that between you and this guy? So if you make a mistake and say this one, they'll be, wait. I think now you are pushing a lot of the licensing that we gave you to another entity. So I mean, the way of working needs to be conditional, or we need to look at it keenly. Let us not just look at the top layer aspect of where this data sits, but again, what are these processes when it comes to consumption, access, who has a priority or prioritized to accessing them, the user rights, and consent, because especially on transactional data, you have to be very conscientious to the customer's will in terms of how you consume the data.
So are you saying that with a bit of regulatory agility, you'd be less closed in what you do? And Stella, I'd like you to answer to that, especially because you're on the other side of the coin, eh?
I would actually say it is true, because I do see a two-part problem, right? I do think we have a willingness problem, but at the same time, I think we do have a regulation problem, because I've been at tables with banks where there's a lot of willingness, but then at the same time, they are very, very much blocked by the regulations that exist. And we all know banks are risk averse within reason, and it makes sense. But at the end of the day, are there policies that give them the mandate or the frameworks within which to share data? That does not exist. So let's call a spade a spade. That is a gap. But on the other hand, I do think on willingness, there is a bigger question there as well. And it's been spoken a lot about here. I do think part of regulation is solving for the willingness problem. And when I always think of the example of the credit bureau, probably initially people were saying, hey, if I positively list my customers, people will take them. I don't think today people are sitting thinking, oh, I will not list in CRB because someone will take my customers. If anything, you learned that there is a lot more value to be gotten through that process than to be lost. So I do think it's still the same exact scenario where, because of the mandate to list to do both positive and negative listing, it pushed a lot of the big players to participate. As an example, it's pushed even Tala to participate, because at the end of the day, we are thinking of it as you have a lot more to lose if you're not compliant. So I do think that is part of what is needed. So I think the regulatory aspect for me solves for both of them.
Asante sana. And my dear.
So I think, in my experience, some of the challenges are also at the level of execution. So there are places where, yes, we are willing and we've thought it through, but then the infrastructure to enable, for example, real-time update to information, how do we address that? Yes, we talk about consent. How do I as a bank know that the customer last night said they don't want this anymore? So I think there's also a lot of work to do in terms of building the infrastructure that enables us to deliver those use cases as they come along.
Asante sana. So Kamau, I'll ask you a slightly different question. And Stella has mentioned CRBs. Mumbi has said that you're a good example. And I agree with her. Credit reference bureaus are probably the best example of data sharing that we currently have in Kenya. What do you see as the role of CRBs in an open finance ecosystem? You've touched on it, but there's a few minutes for you to expound on it.
I think there's a lot of value that is there. So one thing we do see, and going back to also what Stella said before, full file reporting came in, everyone looked at it as I'm sharing my good customers that could be stolen. But very quickly, that narrative very quickly changed, and people started seeing the opportunity to grow their business and be able to take better risk decisions on their customers. So the same thing would happen when we get into open finance. Today, if lending, unfortunately, as big as it is, you heard Karen speak here, they even quote it in dollars because they can't use shillings. The number is too big. It's too big in terms of the amount of money that they're lending. But the opportunity that is actually available by them actually leveraging M-Pesa data to be able to reach a much further audience and be able to give more credit. That's what we're talking about here in open finance. Credit is still very heavily collateralized today in the way that it is done. And that actually means that your farmer, value chains like the agri-tech side or the agricultural side of things totally lose out because they don't have that, the sophisticated reporting to be able to demonstrate collateral for the bank to feel comfortable with the risk. But what they do have is that they have a lot of transactional information that would be able to give any lender the comfort to know that if I advance this amount, they would be able to repay, they would be able to be more productive for them to be able to continue and grow their business. So the openness, at least to that data, would move away from collateralized to more purpose-based lending, backed by some sort of cash flow or some sort of tangible or visible form of asset that could back that lending proposition.
Kamau, as a policy lawyer, I know it wasn't the list, but there's an immovable properties regulation that came up a number of years ago, around 2019, and I think we really celebrated. We said this is the thing that will jolt our economy, because not everyone has a shamba, not everyone has a title deed, or a lease for an apartment. So what are your thoughts? What do you think has been the real friction there, just in a minute?
That's a difficult
Or don't the
one.
banks believe in it? Or don't the tellers of this world believe in it? It's not banks only, by the way.
Again, you see, and unfortunately, I think it's just the way we do business in this country. We would have all these propositions that are open and available, but no one is willing to take that leap of faith. Had it not been for CBA taking that leap of faith of actually lending based on Safaricom or M-Pesa data, we would not be where we are today. The minute they opened it up, everyone else followed. And if you were to critically look at it, how many banks, of the 44 banks in Kenya, how many actually have a digital proposition to date?
KCB.
I mean, there are very few in comparison to the number of banks that are there. So it's these things are, it's one of those propositions. In fact, let me just take another route and tell you what we are beginning to see even from a lending proposition. Because banks are not willing to take some of these, lenders, sorry.
No, it's okay.
Lenders are not necessary, or it takes time, policy, regulations, whatever the case might be, in actually opening some of these propositions. We've started seeing impact funds actually setting up SPVs to raise funds, to give to microfinance to start lending to certain value chains and propositions because it's too slow going on the banking side where the real capital is. And it's a shame. So what's happening is a lot of proof of concepts being done before they can then be adopted or sold into the real value chain, which is in the banking sector. So I think those propositions are there. I think someone just needs to take that leap of faith to utilize those opportunities to open up.
Asante sana. And my next question to Anne Stella and Charles speaks to the leap of faith. If we're to take this leap of faith, at some point we'll need to define the types of data that are included in open finance, the level of granularity. Banking services cover the widest range of products, we think. So I want to ask you, what do you see as the highest priority products to share? And also, do you think we can share transaction level data, or are there any challenges that you see in doing so? So the question, I'm just asking, how much can the two of you trust each other?
Maybe I should start because there's some bit of relation and competition. Let me put it that way. Okay, we don't live in an ideal world. That is how I'd actually carve that. And maybe the way of looking at it, the frame set is on what priorities am I actually looking at. And prioritization here is very important because with the level of kind of service that you're provisioning, all you want to drive is something to be customer-centric, something to be adaptive with the customers, and also to look at the role of innovation. As we say and we look at, and you've said it correctly, the more appealing and more appetizing, even on the licensing bit, is actually the DCP roles, yeah? If you go to CBK, I'm sure now everybody's just telling me, now we are getting our license, now we are getting our, that kind of thing. But then what are these critical priority areas that you're looking at? I'd put it, the way of looking at it, they're good things, or I'd call it sunshine, and maybe there's the rain and storms, the wear feathers, which we've addressed. Even the previous speakers have spoken about it. And here I'm talking about the privacy risks that you're actually looking at, the competition concerns, the security risks in terms of this data. And based on that, what I'd benchmark and what I'd sat and actually thought about was actually maybe a cluster of maybe around 4 subjects that I can look at in terms of a bank. Where I sit, what I need to know is maybe some bit of account information for a customer. I want also to leverage on what I'd call credit or loan kind of information. I'd want to benchmark so much on what saving criteria or investment someone is doing. Are you in wealth? Are you looking at that kind of leverage? And I mean, for the basic reason, and also things like payments, paying your bills, paying your utilities, that kind of information. I mean, that is the kind of bucket that I'd prioritize on my end.
Thank you very much, Anne Stella, and I'll have a comment on that.
Well, actually, interestingly, I have a very similar thought because I always look at things from the lens of credit, sadly. That's my bias. So if I think about how we underwrite, you're essentially looking at 3 things. You're checking for fraud, ability to repay, willingness to repay. So under fraud, I would say with KYC, Kenya is in a much better place as compared to a lot of markets in Africa. So while nothing is perfect, I do think we've made a lot of good strides. When it comes to willingness to repay, I would say, at least the credit bureau framework solves for a bit of that, where you can actually see, a customer who is borrowing, where they're repaying, where they're not repaying. I think we have some solutions there, plus other behavioral signals that we use at Tala. When I look at the biggest gap today, it's ability to repay. And what you start to see here is it starts to present in over-indebtedness, which we've seen a lot in the market. So today, let's take the example of a gig worker. They have money coming in from different sources. So even if I, for example, was at M-Pesa, I wouldn't even say that's a true picture of that individual's income. So how are we able to actually aggregate data across players to understand that, as Mumbi, this is exactly what Mumbi's income is, and therefore Mumbi should not be getting credit above their income. And I think those are the advantages I see. So when we talk about specific types of data and ability, it's exactly what he's talking about, which now becomes transaction data, it becomes account data, it becomes, can it be investment verification? I have money in a money market fund somewhere. Just so on and so on. So I do think that becomes a world. One more thing that I want to call out, just because Kamau mentioned, is the power of purpose-driven, or we call it use case lending or use case access to credit. I do think opening up some very unique forms of data, I think of this as like secondary phase 2, could really be helpful. I found a very interesting use case in India where it was literally tax data, and it can tell you quite a bit about people's income. But even beyond that, NSSF data, NHIF data, I think this starts to move into the realm of government. But I do think those are the pieces of data that can give us a lot of much needed visibility.
Thanks. So I guess the agreement that you all want the same thing. My question now, you don't have to answer now. Would you trust if she collected the data for you and you just provided the funding? Must you get all that data? I don't know. Or would you trust the other way?
I'd put it this way. Based on the priority scale that you're looking at, my approach would be a bit of, how do I put it? Would actually be gradual. And I'll speak it into two ways. Because you're not talking about transactional data. What you're looking at is the bit of concern that the consumer really has and the bit of trust that you have. Banking is a trust business, if you know that. Yeah. Otherwise, we'll all be stocking our money back in our mattresses. So the outlook that you want to give, or the confidence that you want to give the end customer, is that your private or your most, the information that's so close to you as much as transactions are concerned, are still kept within your hands. You still have that power to rule that kind of data. So I'd put it like, let's say, I'd either aggregate it, or have an aggregated conversation, or have a detailed conversation with them. But what I'm leveraging on is the power of the customer to tell me that I'm consenting you to actually do this.
Thanks, Charles.
Yeah.
And I want to, and Stella, maybe a second. Yeah, just this in a few.
Oh yeah, I wanted to just comment on that because I think we've been talking a lot about consent, and for us, we actually call it informed consent. I think for me, I still believe there's a willingness problem, because even when we talk about consent, is there
willingness by who? Because me as a customer, I want money.
Exactly, willingness by the person on the other side, so the financial institution. Because I have been in multiple situations. I think we did a research with just our customers and asked them, hey, if we denied people who are trying to get credit, we asked them, you've been denied today, would you be willing to give your access to your financial statements, your bank statements, and get access to credit? Over 50% of them said yes. Is there a path to do that today? No. And I think that becomes, I think for me that is exactly the problem, because we don't have a customer consent problem, we don't have an informed consent problem, we have a willingness problem. And I know it's tied to other complexities around technical gaps and so on, but at the end of the day, I do think the key conversation we should be having is, what is informing the willingness problem? It's how do I commercialize my data, or how do I make money off of my data? Then I think there's a conversation on different models in which businesses can actually push revenue, and it opens up new channels of revenue there, but it kills that whole conversation on willingness.
And Stella, what you're speaking to is a data protection principle known as data portability. It actually exists in law, where a customer can come and decide, this is the data that you have about me, kindly give it to me in a format that I want, either paper or digital, and share it. So legally already, it's allowed from the customer end. But I want the most independent member, before I get to you, I want the most independent member of this panel to speak to what they're saying. Because the beauty about your job, you get to see what both of them are doing with the data. and you're able to say, are these people lying? Are they saying the truth? What could they do better? Kamau.
You know, I was just thinking to myself, and we see some very interesting things in the data. Capacity, which was mentioned here, what's people's capacity to borrow? We see a huge headroom that's there between what an individual is able to access vis-a-vis what they're able to repay. What does that mean? In as much as people say, this is my customer, that guy is he's borrowing from 6, 7 different people. The guy probably has, each person is only willing to give a limit of 10,000, but this person is getting 10,000 from 6, 7 different people, 70,000 and repaying, yet no one wants to take that single risk on that individual. Other things that we see, okay, this one is very funny, and I hope they're not in the, no, they're not. In a room, and someone was actually proudly talking about the way their product is so successful, they can see an individual who has borrowed over 200 times in a day. And, you know, the penny drops, you know, you're being hit. That's fraud. There's no one who is borrowing that many times in a day. There's just something that is very wrong. So from the openness of that data, there's a lot of informed information that would actually help you be able to say, I could probably grow my book, not by growing the number of customers that I have, but just by growing the limits that I'm offering. I could reduce my risk, not by managing how much I'm lending, but by actually being able to identify those transactions that are likely to be fraudulent, that are being generated by some AI bot somewhere.
Asante sana. So Valentine, the digital credit space has led innovations in alternative data, in particular for scoring models. Would open finance change the value of alternative data? And you're speaking from an organization that is the market leader in innovative lending. That's KCB. And maybe you can check my LinkedIn, you'll find out why.
All right. So again, yes, a classic example of how digital lending innovations, etc., have grown would be just KCB M-Pesa, right? So if the M-Pesa customer, remember today as banks, we only see, I think, 2% of what's actual digital transactions, right? So if I sat and said, I'm just going to lend to this guy based on what I'm seeing in his KCB account, we are not moving. Again, 90% of transactions are on M-Pesa. So it's a game changer when you come to me from this is my KCB M-Pesa transaction limits, etc., versus as a bank, this is what I see. So definitely alternative data sources are critical. 2, for us, it's the richness and quality of data. I think we keep talking about, yes, you'd get data, we're going to share data. A big question is around the quality and validation of that data. It doesn't help my case when the guy who has the same person borrowing 200 times in a day comes and says, oh, this looks like a good guy to lend, right? So how do we validate the quality of that data to inform the richness? There are data sources that are disparate today just because of how fragmented it is, right? So if I asked you how many financial service apps do you have on your phone today? You've got your KCB M-Pesa, you've got your M-Shwari, you've got Tala, you've put in Chums for your savings, then there's the one you manage, insurance, money market. So you can just see how fragmented that piece looks like, right? Mm-hmm. Yes, it's talking about the one Valentine. So there's an opportunity for me to see if this guy got these savings habits, wealth creation intentions, maybe I score him better. My risk with him is less, versus the guy has got like all 35 digital lending apps. So there's definitely value in that. Another opportunity we see is in underserved financial service segments. So I see open finance as unlocking opportunities for people that are not in the core, I'd say, payments lending space, looking at, for example, insurance, right? So those are financial service verticals that really could benefit from this opportunity. Who knows, we might do better lending for you to pay for your car because your insurance guy said, this guy is solid, you know, health access and etc. So there is much more opportunity for us as stakeholders, so to say. If she opens up her data, maybe I could do microinsurance better, on that premise. So I think there's massive opportunities in getting richer data, getting a 360 view of the person so that we're also able to personalize and customize the offering that I'm giving you. It's a different conversation for me to say you have a limit of say 30,000 versus your insurance is coming up, you qualify for XYZ. So there's opportunities for everybody in the room to benefit from that sharing of data, but it has to be quality enriched data.
Asante sana. So I want to open this up to our audience. We have not a lot of time, about 5 minutes. So we just want a few questions, and we can quickly run round. And to represent each side of the table, hey, Felix. Your hand went up very quickly. We usually call him Muni, but yeah, Muni.
Hi, everyone. I think mine is more of a question. And just a quick poll. I'm not trying to take your job, but just one quick survey in the room.
No, let's do this. It's a joint effort.
Okay.
He's a board member. He's allowed.
I'd just like us to do one test. How many times do you guys interact with your bank accounts? In a month? How many times? Once, twice? In a month, sorry. Twice. Okay. Interesting. So we can already see where this is heading. So when we talk about CRB, when we talk about data sharing, when we talk about open finance and all that, we hear a lot of conversations from a banking perspective, from financial services perspective, and all these things. So I'm asking myself, is the open finance conversation anchored on the wrong data? Because when you go to CRB, you get data of what I've borrowed and what I've repaid. But is that me? If I interact with my bank twice in a month, does the bank know me? It doesn't, right? When you look at financial services in Kenya, how many people are banked? Not more than 10 million, because they're the same customers in different banks, all right? How many people are borrowing? How many people have mortgages? It's less than 5 million. So how many adults do you have in Kenya? So where I'm heading with this is, what are the foundations of open finance when you think about it? What should be the foundation of open finance? Because I'm assuming finance is something that impacts everybody in this country. So if you're speaking about open finance from a financial services perspective, it means you're speaking to less than 10% of people who are transacting. So it's a challenge to all of us. How are we looking at it? I had Ref mention that Kenya is a cash-light economy. I'm sorry, but it's not. Only 10 to 15% of transactions in Kenya go through digital. That's the reality. In the agri-tech space, only 4%, 4% only of transactions are done digitally. And that's an industry that is contributing what percent to GDP? Close to 30%. So what are we talking about? So I'm just challenging the foundations of open finance. We just need to rethink. Are we including everybody as we build this framework? That's my comment.
Maybe we can clap for our board member. Mind blown. Next. I think Valentin has. Oh, you want to respond to Muni very quickly?
Yeah,
Okay.
and I think that's why the conversation is not about what data do banks have, what data does M-Pesa have. Everybody who has built a platform, a solution, anything, be it in agri-tech, health tech, etc., you are holding some form of data. So it's not a reserve of CBK needs to create regulation and then the banks and M-Pesa open your data. That's not what this conversation is about. Open finance, for it to thrive and work, all the stakeholders that have built data, have aggregated data. I think they're saying about 80% of the data that exists in the digital world today was created in the last 2 years. That has not come from banks. It's not come from payments, right? So it's the, I'd say, prerogative of everybody that has built it in one way or another, sort of start thinking about how do we monetize, if that's where you want to come from as a commercialization perspective, how do I leverage this data that is the aggregator or the, I'd say, the agro chain. The guy who's selling fertilizer, pesticides, etc., he's not financial services, but we stand to benefit from availability of that data. So I think it needs to be a 360 view. It's not just about financial services. Anybody who's built any form or sort of data, including government, right? So when we're looking at the data sources, eKYC is big. Fine, as a financial institution, I've got some, but there's still data within the government. So I think that, to agree with you, it goes beyond financial services, but it's the role of each and everyone who's a custodian of data start thinking about and participating in this conversation.
Clap for KCB. Charles, over to
Yeah,
you.
I'll maybe I can speak from learnings that maybe also saw from other countries. And it's good we actually open this up because I started by talking about agriculture and the way you look at it. In Kenya, I'd put it, I don't know, Felix knows better, but if you're talking about, like, let's say the kind of agriculture we are doing, most of it is actually subsistent. And if you're looking at mechanized farming here, I'm talking about a person with a tractor, a combine harvester, and everything else, they're barely 20% or thereabout. But if you talk about now the banking side of things, I said, and this I know it applies also for the big banks in Kenya, because we're not that big in Kenya, but we've seen the kind of data we can build to that. But in other markets like Ghana, they realized there's a beauty of collective farming. Do you know what collective farming is? The movements, the circle, the cooperatives and all that. Because people are usually so shy of voiding, how do I call it, payments, or paying back loans, because they'll shame you. You imagine you're a collective of 5 people, so I mean the oppression that comes from it. And what we felt was that one, there was, when I spoke about tech-enabled companies, remember they're not into any financial kind of transaction, yeah? They're just utilizing the data into what kind of pesticide you're using for growing, what kind of inputs do we need to put into this, whatever, and all the way to the outputs that these people are generating. This data is what is giving us confidence into how we want to apply models and also products into injecting the kind of open finance discussion that we're having today. We cannot, as it is today, it's very hard. Try any local farmer, go and ask them. They'd rather go to the cooperative society than actually come to the bank because they know they'll be listened to. Someone has an idea of what they're actually doing. But for us, we want to understand. Remember, most of us, we are just seated behind, the shadows, and you're looking at this guy. First of all, how did you generate? What happened 3 years ago? But if you build this data, if you can come and we can be able to interpret it based on the kind of facilities that you're looking for, maybe it's credit, maybe it's financing for the merchandization, then we'll be able to build on that data. So it's not centered on banks. It's not.
Thanks.
Also in education, you see the same thing. Also in insurance, the same thing. So the kind of open finance discussion we are having is not, let us move from the output of payments.
Yeah.
That was a different conversation. Open finance is how do you build rich data to ensure that actually you can customize or you can build products that are niche for these target audiences.
Thanks, Charles. And can we clap for Charles? Yeah. The passion has just come out. Megan, you're going to be our last question.
All right, 2 questions. One, without belaboring the point, data sharing and data standardization seems to
Introduce yourself, sorry.
Okay. My name is Megan Kathure. I work with the Digital Transformation Center with the German Development Corporation. So on to the first question. Without belaboring the point, data standardization and data sharing is a dire challenge for the industry, and I would wager that our DPI solution, digital public infrastructure data solution, would be one of the solutions to the pain point in the industry. So are there discussions within the open finance movement that you have started to adopt a digital public infrastructure data solution? Are there discussions, or what are the level of discussions within the industry of building a data standards or data exchange platform solution through the model of a DPI? And then secondly, Karen in the morning talked about data classification. We are in the early stages of helping the government come up with a data policy for the country. To what extent would the finance industry wish to see the involvement of the national government to develop or to be part of the open finance movement through the data standards that they are about to develop? Thank you.
I think I'll answer first on behalf of the project partners. What we were doing was the baseline. We're doing the policy, the thought leadership around it. When it gets to technical, we're going to get there. And DPI, digital public infrastructure, will be a key thing in it. I think we've seen that in India, in Brazil. The only way it works, if you move away from the theoretical to the practical, and that's a tech underlying. And you coming from Germany, we'll need money. We'll talk to And the second question I'll have the panelists answer before we wrap up. Sorry, guys, you have to go for lunch.
Rosemary, we also have a couple of comments online. So once that question,
Come up here. Okay. So, yeah, for the second question.
So I'll pass it on as I do. Policy is critical. That conversation around the data policy for the nation, for the government, cannot happen without financial services or other stakeholders having a say and reviewing and participating actively in it. We can't be in a situation where here is the policy, okay, how does that even work in my environment, right? So it's got to be there has to be participation from all the stakeholders, and definitely that's of interest to us to make sure that there's no policy without consideration of how it applies to the industry or to the space that each of us are in.
I know we have questions, so I won't repeat, but all I'll just say is things go fundamentally wrong if policy is created without private sector at the table. So 100% to exactly what Valentine said.
So we have the online comments, and maybe I'd like to read them out.
For those who may not know, Pushare is a crypto exchange. Okay, so that unfortunately falls out of the regulatory purviews of our regulators right now. So that's the bad news. The good news is that the State Department of Treasury has engaged with the industry to have deeper conversations around virtual assets, around the virtual assets policy. So all I can say to my brothers and sisters in the crypto ecosystem is that things are starting to move.
Yeah.
And as things start to move, don't quote me. There are guys still doing business in the crypto space, but please don't quote me. But we want a proper framework for these organizations and institutions that are in financial services to be able to operate without looking over their shoulders. The fact of the matter is that crypto is here. We can't wish it away. Thank you.
Thanks, Ali. And I think that's a very important question because it has helped widen our conversation for the broader, the next level of financial services. As we close, I'll ask like a lawyer. You know, when you have hostile witnesses, I'm a lawyer in training, you give people yes, no answers. So you don't explain, you'll explain your answers at lunch. Should we charge for sharing of data? No, I'm just asking. Should we charge? Charles, yes or no, as like a hostile witness? Should we charge? You see this open finance thing we're talking about? Oh, we put our data somewhere, Let me make it blunt. Should EcoBank charge Tala or Tala in EcoBank or vice versa? We already pay for CRB, so you don't even have to answer. Yeah? Charles, you don't have to be politically correct.
I don't put it this way. No, we shouldn't. And my way of looking at it, remember open finance steps from open banking. The rule of thumb, I remember when we started that conversation, was that transactions should actually be
raised to
yes,
0.
but what you should actually be looking at is this. There are other services that you're actually projecting out of this that are commercializable.
Charles,
Yeah,
answer explanation at lunch. Yeah. And Stella?
No, because I don't believe raw data is an IP, so it belongs to the customer.
Thank you. Valentine?
No. We'll make money off the use cases later.
Wow. Thank you. Kamau, and as you answer that, I'll be writing a petition to court so that I'm not charged for CRB.
Only CRB should charge.
Asante sana. I guess, guys, that ends it. Asante, let's go for lunch immediately because we ate into 2 minutes. We need to walk to the lunch area in exactly a minute, so just shuttle out. Come out, sorry. Yes.
Yes, thank you, thank you.
Back
Thank
to
you,
you.
everyone. Thanks for that conversation. Thank you, Rosemary, and our panelists. It's been a pleasure. So we've heard that consumer trust must be the foundation. Without it, open finance fails. Interoperability is critical. Fragmented systems won't deliver impact. Regulators and industry must work hand in hand, Kamau, to strike the right balance. And also, finally, data is more than compliance. It's a new frontier for innovation. So ladies and gentlemen, lunch is served. Please make sure you get your tickets as you leave from the front desk. We'll reconvene over here at 1:30 p.m. and we'll continue the conversation thereafter. Thank you so much. Oh yeah, and also the panel photographer.
Thank
And
you
the click
all.
works, yeah? Apparently it's working, yeah.
Oh, great, the
Yeah.
advancer's working. Perfect. All right, can we pull up the slides, please? Starting with rules of the road. Okay, so what we're doing in this session is so who participates? Are they required to participate? What functions are included? For example, Australia learned the lesson the hard way. They didn't include payment initiation in data sharing, and it just created these extra steps. Because if you share your data to get a financial service, you want a seamless experience where once they confirm the data, they can then make the request to transfer the funds. And so that really slowed down their use cases. And then what's the scope of data covered? And I want to signal something for you to think about later that we're going to discuss. What is the role of third parties, right? So not the banks, the digital lenders, the money providers, but the data aggregators, the ones who provide the back-end solutions. How do we safely have them participate in this ecosystem? Because in pretty much every market I've looked at least some of the providers need to outsource those services. Then there's the rules about operationalizing open finance, right? Once we're live, how is it going to work, and what are the rules of playing? And I mentioned liability and accountability. Who's responsible when things go wrong? How can you build trust for consumers as well, that when a thing goes wrong, even if Bank A says it's Bank B's fault and they disagree, the consumer will be made whole, even if the two parties can't disagree. What's the pricing and funding of this? This greatly impacts the cost to consumers and the cost to participate. And then how do we supervise this market and make sure we have good consumer protections and data protections in place? So last year, I convened a meeting with more than a dozen regulators from across the globe, and we did also some research and deep dives into a few markets to figure out like what's worked and hasn't for those who have already walked this journey. And I want to share with you a few slides of the key lessons they shared of things they did or wish they had done. And so the first is about how do rules encourage participation, right? And I mentioned this before. It seems pretty clear that you really want to link payments functions where possible to open finance for more use cases. You saw how India is using government data, and we talked about tax data, business registration data. That can be a real nice carrot for reluctant actors to join, because it's not just I go in and I'm sharing my consumers' data. I can maybe get land titling data like they have in India. I can maybe get, like in the UK, tax data for small businesses to better serve them. So government can offer some nice carrots as well as being the rule maker. Hackathons. This picture is of the Central Bank of the Philippines Open Finance Hackathon. They did this last year to launch their pilot. And they ran a hackathon where a bunch of different teams competed on an open finance use case. And they picked the winning one, which is one to try and make the enrollment process for the national pension scheme much easier, because there's a heavily paper involved with many parties. And so that's their first open finance use case, and they're live testing it now. So we can be creative with those things to get parties to participate. Now, as I mentioned, third parties, don't leave them out of the picture is my view, but have rules for the aggregators to support. The other thing around standardizing and making a consistent experience, some places, they just say you have to have APIs to share data. But what a lot of regulators have learned is you want to dictate the standards. You need a common set of standards. It will just enable faster execution. Even private models like FTX and US have standardized APIs. So I highly advise to not just say there shall be and then let them figure it out. User experience guidance and standards. In some markets, like in the UK, some banks didn't want to do it. They should drag it here. And so they would create open banking services. You had to go through 15 screens to execute the transaction. You think you had to go through 15 screens to do a normal transaction with them? No. So they had general principles of user experience, but a lot of countries have learned, let's write it down. Let's have good examples. Other thing is that give to get. You should be, if you're going to use data, you should be able to share that type of data if you have it. Another one is that free market approaches to pricing, we'll debate this, can be tricky. So most markets want some form of standardization for pricing than a purely free market. And this is an example on the UX side of why I think it's important to develop big common standards, because it can lead to nice innovations. This is a WhatsApp-based consent journey for open banking from Banco do Brasil. They were the first bank in the world to use WhatsApp to complete the consumer consent journey. And I think it's a great example. Brazil hasn't exploded. There hasn't been the data breach. This works, but it's also in a way that works for consumers. Then, last thing is in terms of monitoring, it's really important to have these live dashboards where you have metrics on the APIs, quality. Because at the beginning, some banks and providers, APIs will not work out. There needs to be visibility and transparency, and dispute resolution systems, clear ticketing systems are really important. Share that earlier. And that even if you delegate implementation, the regulator should still be able to look in and monitor. And I would encourage you all to go to the website Soft, which is the NGO in India that's implementing their open finance regulation. And they have just some really cool dashboards. This is just one screenshot of the API metrics. And you can see they have the FIP means financial information provider. So they have 186 milliseconds, the average for that particular bank. They have 100% success rate, 0 timeout. So you can see how it's important to do that, because at the beginning, some banks were having error rates over 99%. So it was really important to monitor and improve that as they went. All right, so now I'm going to dive a little bit more on each of these. And like I said, I'll just share a few examples, and then I want to get your sense on what you think might be reasonable rules for Kenya. So the first is on data reciprocity. So the idea with data reciprocity is just that if you have certain types of data covered in open finance, and you're a participant who has that type of data, you should have to share it if you want to be able to receive that data. And you're like, that seems obvious. It wasn't the case always in some early markets. Some early markets, they just had the largest banks as financial information providers at the beginning, and it's since expanded. So I'm wondering, show of hands, how many people think that we should have data reciprocity as a rule in open finance? Okay. How many can anyone make an argument for a case where we would make an exception, or there might be cases where you wouldn't require that of all firms that wanted to access data? Yeah.
I wonder what then it will be for government data, in terms of reciprocating for government data, how that will play out here.
Right. So can you explain? Do you mean in terms of, because the providers won't have government data, right?
Yeah. So the government will be putting in data, for argument's sake, then what do they get in return? So.
That's a good point, because I view that as sort of a separate bucket. And so I think you're right. That would be a case where that you might not be having a reciprocity principle on that, right? So I think like reciprocity on the core open finance, financial data. But yeah, that actually raises another point of, reciprocity would only apply to the covered data. If you have a credit score, you don't have to share that. Or if you have alternative data or data that we didn't include in the open finance ecosystem, you wouldn't be required to share that. Can I get the slides back? Yeah.
Maybe thinking of it from I'd have a use case maybe from my backing as a financial institution, talking to healthcare. The other way I look at it is they will need very basic information from me, maybe banking details, very minor KYC. But on their end, for the bank, I don't think I'll need all that detail about the person's medical history. I think up to that level, it limits me in terms of how much the health industry, let me put it that way, should share backwards to me. I don't know if anyone can see it that way. In terms of government, of course, again, there has to be, because a lot of times this consent thing is not a buy-in. It's built on the board of what do you need to do. I think platforms like IPRS have been able to show us clear examples of how exactly things can be done that way, back and forth. Just building on infrastructure and basic use cases that can be amounted to that. But it's not a must again. Yeah. So I think if you follow the DCP concept, minimization comes to play in such kind of circumstances.
That's an excellent example. So you're saying, like, there could be things that you have about a customer that you would share in, but if it's shared from a health provider, it infers some sensitive things. Like, I don't want people knowing what doctor I go to. Yeah, that's an excellent point. Yes.
I know people look at data sources and specifically government from the point of view that government may not need information from the private sector. But if you were to sit with the people who are doing the planning for government, they may not need the micro data, but they may need the macro data. So the question is, from an aggregation perspective, how do you combine this data so that it makes sense to either policymakers or people who are looking at allocation of budgets for, you've talked about health, you've talked about education, you've talked about infrastructure, population density, for instance. If you are to monitor the trends of how people are moving and where they are moving so that you have an idea of what you need to put in place in terms of utility infrastructure, then as much as we may be looking at this data from a very personal perspective, because from an open finance perspective, you're looking at how you're helping an individual access the various resources. But if you now put your lenses on from a macro perspective, then everything changes, because then you're looking at industry data as opposed to data for ref and Amoyo.
Yeah, so aggregated data is just inherently different in terms of permissibility and the audience of it than the detailed, account or transaction level data. That's a great point. And so if you think about these, could we do things in addition to these dashboards they have about API performance? Can we create dashboards about utilization of financial services by geographic location, things like that? And you can see, if you have an inclusion objective, you can see an uptick in services to certain populations. Also, I was talking with someone over the break about the risk of over-indebtedness. You can, like on the other side, if I see a big increase in consumer lending in a lower-income population in Nairobi as a result of open finance, maybe I need to look into some conduct issues. Yeah.
Good afternoon, everybody. So I'll use your example of India, with your most favorite country. The Indian government lends data of the low-income people. First of all, this information is used for the distribution of milk, as one example. But now the banks were rushing in to take advantage of this opportunity. Why? Because India is moving away from a cash-based society to digitized finances. As a result, the banks took advantage of this low-income group of people, and they, in turn, were being given access to loans. So I've seen how that works both ways.
And generally, that was, would you say that was a positive? Like it expanded the access of the milk producers? Yeah, and it's a great example where the government didn't pick, oh, we're going to share, this data on dairy producers just with this bank or that bank. They put it into the aggregator ecosystem and made the best firm win, which is what we all want. Next, can I get the slides back? So I think these are some really good exceptions. We talked about where you might not even want the data back because it's by nature that firm engages in sensitive things a consumer may not want to disclose. And you don't want to take on health-related data that you don't need to know about. It creates a liability for you. You have to store this data that under the Data Protection Act is called sensitive data. So it's additional compliance. We talked about aggregated data, market intelligence data, that's treated differently. So like the reciprocity, this is good. We're starting to think of some restrictions of like, we want reciprocity on the core commercial data that's included, but there's definitely exceptions for other ones. Let's dive into pricing and monetization. So why I say pricing and monetization is because it's not just about charging, because some charges are related to cost recovery. Some, in the case of monetization, it's about increasing revenue. And that line is blurry, right? It's hard to distinguish that. And there's three useful questions. Hat tip to Marie Walker, who helped me put together this framework. One, how's the national infrastructure open finance going to be funded? Two, how do participants generate value and, if appropriate, cover their costs? And how does value to consumers in the economy influence your policies around the pricing, right? So in certain markets, they've made, banks have paid the majority of the share in the early stages, right? That's like a UK, Australia, Brazil case. And I will share that over time in Brazil, because the utility was so great, they've drastically reduced the amount that banks pay. And it used to be the cap in terms of total share any bank could pay. It was based on volume with 15%. It's been reduced to 7%. And they're making like the neobanks and the fintechs pay more. So this can change over time. But that's generally been the approach in the early markets. But in some markets where either that's going to be a challenging sell or where government resources are more limited, there's been use of grant funding and things like that. So look at Sahamati. Again, this is the Indian one. Look at their revenue sources, income sources for 2021 and 2022. 97 and 95% grants, right? And so they leveraged the kind of philanthropic donor community to help build some of this infrastructure. So that's the thing we'll have to think about is how much is industry paying, how much is government paying, what are the other options for financing? On pricing for open finance participants, I'm going to give a bunch of examples later, but just wanted to share. So Chile has an interesting blended model, which is very similar to Brazil, where they say you can't charge for any payment initiation activities or for development of your infrastructure, which I think makes sense because you can shift OpEx costs any way you want internally, and you could say it cost me $100 million to build my open banking APIs, so I'm going to charge all those who connect, an exorbitant amount. But then they also say data is free up to certain limits. So you can pull 4 KYC checks on an account of a customer per month. And then after that, there's pricing can be allowed. 150 transactions per month. 120 terms and conditions pulls. So, and then with these, they set some rules around what is like appropriate pricing levels. So you just say you can charge whatever. But so there's a lot of different models that you can consider. And really, I would break it. Can we move? I mean, I love looking at myself, but can we move that down so we can see the rest of the slides? I don't think we need to keep that up. Generally, there's like, and this is overly simplified, but there's like kind of 4 buckets. Totally open to commercial rates. India does not intervene on the commercial terms of their members. Remember, it's an NGO-run, non-mandatory model. Brazil and Chile, you saw the thresholds example. That can be tricky because billing models can be hard to implement. And a little story, not a single bank I talked to in Brazil is billing for anyone that goes over. Because 1, they see they're getting benefits from open finance, they don't need to recover the costs. And 2, that kind of variable billing structure is really hard to build. Like, it'd be complicated to build it, it's not even worth it. Cost recovery, Mexico and Korea have this. What's challenging here is if you're really general about it and say like reasonable cost can be covered, what is reasonable? And then the lawyers on both sides argue for 6 months. Then what you have in Australia and others, and people have mentioned this here, is like the data covered under the consumer data right in Australia is free because it's the consumer's data, it's their right to share it. But they allow for premium APIs and services that are in the ecosystem but are value-added services. And you can charge for those. One challenge here is sometimes setting that line between what is the core free data and what are the value-added services. 5 sort of lessons, I would say, from regulators on pricing. Likely you need some sort of rule set by the regulator. I'm nervous about totally open models, especially in markets with relatively high concentration like here. It's really hard to estimate the implementation costs. In Australia, the evaluation of their open finance regime, some fintechs said it was about $1 million to build their, like larger fintechs to build their APIs. Some banks said it cost $100 million. Who can say, right? We don't want to get into accounting wars. At a minimum, I think you should have pricing parity. You can't do differentiated pricing like they used to do on USSD, where it used to be some banks for one USSD session were charged 1 shilling, some were charged 5 shilling. That, I think that to me is like my most hard and fast rule I would recommend. It should be, if there's a cost for an activity, it's a standardized cost. You have to think about how does this cost pass through if we have an inclusion mandate. And then you need to think about, does this conflict with any data sharing provisions? Luckily here it doesn't, because the data portability clause in Data Protection Act is pretty weak, honestly. It says every 30 days. So this would be a great improvement on that. Okay, so you all had a wide range of opinions on this when we talked to people. Some said no charging, charge but fix the price. Some said charge with full or substantial flexibility to set prices. So there's probably a bunch of different opinions in the room. So I want to ask you, what do you think about pricing? We don't have to go one by one in these questions, but if we're thinking about funding the costs of the infrastructure, or we're thinking about kind of pricing of the transactions, do you have any thoughts on whether charging should be allowed, when it might be reasonable to charge? Let me just open it up if anyone wants to.
So one thing we're seeing, which maybe you haven't covered, is insights based on prediction. So we're seeing some fintechs in some spaces being willing to buy based on what can we, willing to pay for data based on the predictive analytics.
Interesting. So in that case, like you say, okay, they're charging me for the data, but the inferences I can make with my algorithm of the data make it something where I can monetize that. That's interesting. And that's where you get into the difference of like, are we thinking about this pricing based solely on the market or on the consumer who has a right to their data, which are 2 different frameworks to look at. Other thoughts on pricing? Come on, don't go silent on me now. How should we fund the infrastructure? Do we think industry should pay part of the costs? Do you think we can expect government to cover some of the costs? Who has ideas on how you might cover the initial build and the maintenance of these systems? All right, show of hands, how many of you as institutions might be willing to consider cover, and don't worry, we won't quote you, consider contributing to the costs of the infrastructure? One, okay, great. I appreciate your brave soul, because you've seen the value, you know? So do we think that, you know, we can find, is it likely we could find the budget in the government to cover this? Or what do you think, how do you think we could best cover infrastructure costs? Anyone have any thoughts? Yeah.
So, looking at the American model, which is called the toll road, so depending on the usage, you get to pay more. If you don't need access to that data, you don't have to pay as much. Just an idea, a thought. The Nairobi Expressway is working very, very well for people, but then again, it depends on usage. If he doesn't need it, he will never go. You use it every day to go to the airport. You got to pay for it.
Can I ask you a follow-up? Do you think if you implemented that model, kind of usage-based pricing, and you could have different subscriptions or things like that, do you think those costs or those fees should all go to those who are the entity providing the data in that specific case, or do you think it goes to the system or a mix? What do you think?
Just a wild idea, but use a system of socialism. Why not share it? There's nothing that is perfect in this world, but you have to start somewhere. We have to design a system that works. You can also change it. I mean, I like your NPR grant, whereby you said, let's utilize donors who are willing to help fund it. That's a perfect idea, but in this country, I don't think we have enough corporations that will be willing to subsidize. Safaricom will, but who else? ABSA, Backless? Perhaps not.
Yeah, and I mean, that's where you could say, you can pull a little bit from different markets. So you have a little bit of India, look for some grant financing. You have a little bit of Brazil where some of the larger entities, not strictly banks, but some of the larger entities contribute a portion. You can think about like the UK where you have the government, and Australia where the government did chip in a portion. Yeah, we've got it, perfect.
Yeah, I'm just trying to think the possibility of, kind of regulating a free market. So if I'm sitting with data, which I've acquired using my own resources, and then we are operating in an open finance framework, and then you're telling me to share this data for free. Of course, I'm storing it, I'm managing it, there are costs that I'm incurring. So I thought of how can we actually look at raw data from as part of our digital public infrastructure, for example, so that we say folks in healthcare, in the HMIS, insurance industry, data and whatever it is it a way that all this can be aggregated in a central, for lack of a better word, a central depository place, so that it becomes something like IPRS, for example, right? Then it becomes like a public good. In that sense, it's easier to control how much it costs to access that data because it's a central point, which is funded by taxpayers, for example, because it's a digital good, public good. Then the next level would be if I have data that I have processed or added value to. For example, I've developed insights out of that data. Then I'm allowed to charge for that.
Yeah.
But at the basic level, where it is raw data, how many times did I go to hospital, how many insurance have I paid and whatever it is, what do I farm, how many cows do I have, that basic level of data, if it can be made a public good, and then it's easily regulated, And then the next level where it is processed, where you've derived insights from it, then people are allowed to charge for that.
Yeah, that's an interesting, I think you could consider that. I think there's a lot of positives of that. Anyone have a thought? Or, yeah, I'll go to you. I'll share actually a thought. One of the downsides of that, which doesn't mean it's a bad idea, but the debate is then you create kind of a honeypot problem where you have a lot of centralized data, and so a data breach of that would impact more than just a data breach of one open banking participant impacts their customers and any data they've pulled from others. So that's definitely been debated. There's different markets that take different approaches. Yeah.
I actually just want to piggyback on what he said.
Yeah.
For goodwill on utilization and to avoid litigation, the basic infrastructure should be done as a public utility.
Public
and
utility,
then now
yeah.
people can then build on. Because what happens when it's privatized, there'll be lots of interest to make money out of that data,
Yeah.
and it will beat the purpose of utilization. Yeah, so limitations will be there from a litigation, from scaling, and that goodwill in the market will be missing.
Would you be at all comfortable, because I think public utility is one idea, would you be at all comfortable with a nonprofit being the implementing entity like in India, or do you think like strictly public utility?
Looking at where Kenya is today and being a hub in the East Africa, and looking maybe from a banking perspective, we have local banks, we have international banks in the country, we have regional banks. I think it's best when it's a public utility. And then that will make it easier then to, for all the parties to have that goodwill and just use it as a utility. If you look at PesaLink, for example, it didn't pick much done by KBA. But if CBK comes on board and says, this is what we're going to use, then you'll see that scaling up.
I'm not going to touch that current debate. That's an excellent point. Thank you. All right, we have 7 minutes. I do want to touch liability, so I'll jump into it. But I would say pricing is one of the ones that's going to be the most details to hash out, and there's not like a one good or one bad approach to pricing. It's really going to be you all thinking about what's a reasonable compromise of the interests that are at the table. Can we get my slides up, please? Okay, so I want to talk about liability quick. I'm going to speed through this a bit. This is the densest part of the presentation. You can look at it afterwards. But why this matters is because we all know data breaches are increasing rapidly, and this is creating new data sharing opportunities, but also risks, and we're connecting so many more diverse types of actors. So we need to really figure out a strong liability framework, just like consent. It's like one of those absolutes. Do not proceed without in open finance, I would say. And some of the scenarios that can be hard to work out, these are just 3 scenarios. Working with Scott Farrell, who designed the liability framework in Australia, we created a bunch of scenarios to help you think through it. And just to, for example, who's liable in these cases? So customer requests their bank share data with the customer directly. Customer stores it on the personal electronic device, banking data is compromised. Who's at fault there? Customer, right? That's a pretty straightforward one, right? It's like if you share your PIN, yeah, that's on you. Scenario 2, so digital credit account data shared is inaccurate, incomplete, or misleading. And then the entity that receives it makes a product offer based on that ends up not being relevant to the consumer's profile, needs, or risks, and they get dinged around suitability by the regulator. Who do they think is responsible in that case?
I would say the product developer, because it's on them to verify data and just check for accuracy before relying on it. Yeah.
Anyone have a differing opinion?
Well, I believe it will vary depending on who was the provider of the data and who is the controller.
Yeah.
So in this case, if the bank is the one that was inputting the data in the system, it's going to be the bank that provided the information because the responsibility is solely on the bank to ensure data accuracy.
Yeah, because you were the submitter and you agreed to data accuracy. Can I get just keep the slides up, please?
Slides.
Yeah, we don't need to jump back and forth. All right, this one is tricky. A malicious actor intercepts customer data as it's being shared between the customer's bank and an accredited data recipient, someone else that's allowed to receive it in open finance. Who's responsible there? Anyone got any ideas? Yeah, both, you said. So tell me a bit about both.
I'm saying both because I'm thinking the source of the data and the recipient should have a way of agreeing on a secure, what do I call it? A secure link for data transfer. So both of them will have to share liability.
And that might be pragmatic because it's really hard to unpack sometimes you can find where they're compromised, but it can be hard to figure that out. And I want to share get to some, I'll share something related to that scenario. Like I said before, I think in those cases where there's a dispute about liability, the key thing is to make sure the consumer is made whole, and then they hash it out, right? That's like in the UK, I believe Australia has that as well, where the consumer doesn't have to wait. Because you ever been stuck between two customer cares? Oh my God, it's the worst. Like, when I look at complaints data for a living, and that's always the most unresolved complaints are anything that goes cross-party. All right, so I just want to share quickly, this is something, look at this on the slides later, but when you think about your liability framework, and this is Scott developed this, it's the who, why, what, how, and where of liability, right? So who's liable? Why are they liable? What happens when they're found liable? How do we know they can beat their liability? Some regimes, like the United Arab Emirates, are requiring indemnity insurance for data breaches for open finance participants. It makes sense, because a data breach can be a very big systematic thing with large costs and large settlement costs. And where do we set out that they're liable? Put it in the initial rules. I think it's really challenging when the liability frameworks are not clear. These are some of the problems. I'll just quickly, I think I've covered most of these, but one I would highlight is infinite copies. Unlike payments and transactions, a payment happens, it's a one-off event, and the money moves, right? Your data, it's really hard to control your data, and this creates a problem where data that was used properly can then be used improperly. It can be replicated or copied or misused. And then that gets to a point about how do you figure out ways for third parties to participate, which I'll get into. And so these are just some of the ways different markets are approaching liability. So I like Australia's model for third-party participation. They allow representatives of primary actors, and they allow sponsorship models, and the liability is shared by the primary participant. If I'm a bank and I use an aggregator, both me and the aggregator are responsible, and you need to report every few months your list of third parties. And anytime there's a new third party, you have to notify of a new sponsorship and a new accreditation. And so this is how they, as I showed you, 89% of the activity in Australia is third parties. So they're really the machine behind the open finance, but you need to make sure they're legit and accredited third parties. So I really like them. And I like how Brazil handles user authentication. When you contract out user authentication, the account holder is responsible, right? You contract out the KYC, they do something bad, that's on you. And I think that's a case where you may want stricter liability for the primary. Risk management, Chile does a nice job. They require you put forth how you're going to handle third-party risks. You can see the list. This is in the regulations. Nigeria, they specify all service level agreements have to make clear that sponsoring participants are responsible for the conduct of those they work with. So Nigeria is not a heavily regulated model. It's a voluntary framework, but they have put that in the guidelines. If you participate in open banking, you need to have liability responsibilities, all your service level agreements with third parties. So these are all the ways as you can see, this is the thing that lawyers at your organizations are going to love. These are the ways that we're setting up liability frameworks, and it's super technical but super important. And the last thing I would say, before I know we got to get to last session, is one of the main reasons this is so important, and I've been echoing it over and over throughout the day, is because we need to find out a way to have responsible third-party participation. And that is one of the trickiest things I think about when I think about the risks of open finance. And the opinions, like on pricing, of you all when we did this consultation were very mixed. A lot of people said they're super useful. Other people are understandably really nervous about, like, how can I trust this third party I don't directly interface with that someone else is sponsoring? I haven't vetted them, and that's where standardized accreditation and vetting through the open finance entity is really important. Because if we all know you must be accredited, and I would not let individual participants do the accreditation, have the regulator or the special purpose vehicle or the public utility do the accreditation. So there's no like, yeah, it looks good, and they claim they did the compliance check and they didn't. So centralized accreditation is important for this. Okay, so I've run a little over time, but I wanted to dive in a bit more technical level. These are not the only rules, right? There's several others up here we didn't cover, but these rules matter, and it's really important that we set as much clarity up front as possible on all of these, because, you know, we need rules. If we didn't have rules of the road, I mean, if we think traffic's bad now, if there were no rules, imagine it. And it's the same in open finance, right? We do not want, we do not want a system where some people are driving on the right side, some people are driving on the left side, some people are going 200 kilometers an hour, some people 20. We need a standard set of rules. And I think going forward, that's probably one of the most important areas where the industry will need to interface with policy makers from the get-go. So yeah, I think I'll turn it to the last panel now. Yep, where's my faithful MC?
There you go. Thank you so much, Sharif. Please give him a hand. So now we come to the last session of the day. This is the closing session, which is the way forward for open finance, key lessons from the day, what is next for the industry efforts, and how we can support open finance going forward. Again, we're looking at the practical next steps as far as Kenya's open finance journey is concerned. This particular session or discussion will be facilitated by Francis Guer, the Financial Sector Policy Specialist for FSD Kenya, and also one of the leading drivers of this initiative. So please welcome Francis to the stage and take us forward.
Thank you, and we'll try to be very brief, but also to be as practical as possible. So, as Moses has said, actually FSD's work in open finance started in 2018. At that time, the Competition Authority had just concluded the second of two competition inquiries in the banking sector. And this second inquiry was looking at competition from a demand-side perspective. And one of the recommendations out of that inquiry was that there needed to be improvements on consumer data sharing, specifically to facilitate competition, innovation, and account switching, which really resonate with the top reasons why most of you sort of see the rationale for open finance in Kenya. And at that time, the National Treasury designated CAK to push through the implementation of those recommendations. That's a process that FSD supported, but unfortunately, due to very many reasons, those never saw the light of day. And at that point, we were looking at what other markets were doing, and we were quite enamored with what was happening in the UK. At around that time, open banking was just taking off. We were looking at the work that the Competition and Markets Authority and the Financial Conduct Authority were doing on switching and account portability, and we are looking at ways in which those could be implemented here. You know, it's all those have sort of led us to this point, and that's why we are more than happy to partner with both the bankers and the FinTech Association on these current initiatives. And since this is a reflective session, so a couple of things stood out for me. And one goes back to the point that Anne Stella made earlier about regulation helping to overcome willingness and inertia. And, but I think Amoyo, who is on my table, also talked about, you know, regulators always tailing the market. And he mentioned that regulators will never be ready, and it's industry that needs to lead the way. Which is true, all of that is true. But then I'm thinking about that also in terms of other work that we've been doing, and one of the recurring themes that I've been hearing today around standards and having clear rules that apply to everyone. And a couple of years back at FSD, we used to run a research activity that was trying to evaluate the cost of financial transactions, specifically banking. And what we used to do was to run to sort of construct a basket of transactions, and then we'll attach some cost to it, and then we'll rank bank from the cheapest to the most expensive. And the banks were never happy with that because in I think 2 out of the 3 years that we did that, it made the headlines of the Business Daily. And of course, the most expensive bank was not happy about that. It just happened. At that point, we were opening a corporate account with that bank. So, you know, all the British pounds that were going to flow in was sort of smooth and all that. But then the way we used to derive the transaction cost was that we used to compare account statements. So what we used to do was we run a couple of transactions, then we pull out statements and try to figure out what the actual costs were. So you'll get one bank, so you pull out a monthly statement, and you have one bank that sort of the first transaction at the beginning of the statement is the last transaction that happened during the month. So the transactions for the 30th of the month will be shown first, you know, going backward to the transaction of the first day of the month. But then you also had some other banks where even within a singular day, so if I run like 10 transactions today, the last one will come up first. But then other banks will do it differently. There are varying ways of sort of displaying fees, for instance. Let's say SMS costs. So some banks would for each transaction that you do and for each SMS that you are charged for, it will be attached to that particular transaction. But for some, they will wait and accumulate that until the end of the month and then lump that as one charge. So it takes me back to even the point that Rosemary made earlier about data portability being allowed for within our data protection framework. But then the open question is how effective will that be if even the simplest way of comparing account statements is not in a very standardized way. And then the other thing that also, you know, I was reflecting on was one of the things that came out during our conversation with industry, and also that came out during the discussions early in the morning around the hashing of some account details. And I think there are very good reasons why that particular provider took that steps, because I think there was a bit of abuse in sort of sharing personal information in terms of name, ID numbers, etc. But then the open question is, and going back to the issue of standards, here we have a case where there's one market segment or market participant that has gone ahead to define sort of the way that they want to do their own transactions. And then you have another half of the market that is relying on that to sort of also, you know, like was mentioned earlier, to do refunds and things like that. So then how do you solve for those two tensions, where you find a case where it's the part of the market is what has provided the standard? It goes back to the role that policy and regulation can play. But I think that, anyway, those are my own reflections, and I think those are stuff that we need to think through as even we close and figure out our next steps. But this session is more hear from you on what you think should be our next steps. And I'll ask Hilda to pass around some feedback forms.
Did you want any verbal responses as well?
Yeah, sure. Yeah, I'll come to that. Yeah.
So do we want the slides to be put up?
Yeah. First one.
Can we have the slides, please?
Yeah, sure.
Also, if you'd like to ask him any questions or clarifications. Oh, there you go. Right next to me.
Thank you. So I have a question, and something I thought we would touch on is what do you see as some of the business models that might come out of open finance? I know we've talked about the current stakeholders, but what other stakeholders, perhaps in other markets, exist that may come up because of this open finance? And I think it greatly contributes to the question around, oh, sorry, should I start?
No, go ahead.
All right, yeah. So my question really is about what business models do you see coming out of open finance? What is the experience in other markets? What should we brace ourselves for?
I can speak on one, and then I'll let Ref give us other global examples. So the first one that comes to mind goes back to that 2018 initiative. So it was a competition inquiry, and one of the things that was coming out was there wasn't any switching that is happening. You know, going back to our lessons from the UK, there was always a joke that people in the UK, they divorce more than they change their bankers. Okay, I don't know if that's a good joke or a bad joke, but anyway, you get the point. And one of the things that we are seeing in this market is, if I'm with Bank X and I want to get a loan from Bank Y, you are required to physically take your 6-month or 12-month transaction history, go with it to that bank. They'll need to verify it and sort of appraise you based on that. And at that point, you'll be starting a new relationship. So even if you are appraised favorably, you'll still have some waiting time before you can be granted credit. So those are some of the use cases that we are seeing. But I want to invite Ref, because he's looked at this in other markets and could illuminate on more of the experiences that could be possible here.
Just one example that I like to use is in the UK. Right, that was the first one. We haven't talked about them as much today. But what's interesting is when you look at the users of open banking there, it's more small businesses, as a percent of small businesses use it, than individual consumers in the UK. And I think the account management and the business financing services and basically integrating all of that to give you a better dashboard as a business to manage things. I was talking in the break how when I had a limited liability company here when I worked in Kenya, and boy did I struggle finding accountants that would remember to submit the nil return to KRA, and boy did I pay some fines until I found a good one. And I would have loved open finance where there was a solution that could take all my accounts and handle the accounting service. And I actually have that for my American business now. I use an online accountant that does all of that cheaper than any accountant I can find. So I think these small business dashboard solutions are really exciting. I'm curious, you all thinking about if we have all this data you want shared with each other, what are some use cases you could use with them? I'm curious what they think. Yeah. Anyone got a good idea of something they would make or build? Oh, you're saying that's, Plune's saying that's IP, so. Yeah, true.
Anyway, Oh, there was a question. There's a question.
So it's not a response to your question, but mine is just to ask. Have you considered a sandbox environment with a regulator? There's FSD Kenya and FSD Africa. You're doing the same initiative, but one is in insurance, one is in finance and banking. Have you also thought about how can you as FSD collaborate to lower again the cost of such initiatives?
I'll start with the first question around the sandbox. Actually, the only one sandbox that exists in this market was out of an initiative that FSD Kenya and CIGAP led, I think from around 2018 thereabouts, to help set up the capital markets sandbox. Of course, the big prize is to set up a sandbox within the banking sector. And that the failure of not having that sandbox is more, from the regulator side. In terms of FSDK and FSD Africa, we are sister organizations. We have different mandates. But yes, on some of these initiatives, we do work together. And I think for something like this, certainly we should. But just turning back to closing, so I'm sure that all of you now have some feedback forms on your table. I'll request you to just take 3 minutes to just fill those out, and then we'll come back to questions, and then we'll come back to our last discussion. I'll ask that we fill out the form, 3 minutes, and then we'll start with you.
So is this a physical form?
Yes, it's. Yep.
Okay. Also, please go online, again, using the QR code that's on your table. Before we wind up today, there's a few more questions there on the mentee, so we'd also ask you to complete filling that out as well. There's about 5 more new questions.
Yeah, he's got a series of questions on the slide that he's going to do next.
So do they have this slide? That's the question.
They do.
It's in yours.
Yeah.
Is it at the very end? Okay. So we do have a question here.
And so my question is, do we have any data, I'm not sure that it was presented when I was away, of markets where open finance has worked very well? And this is from a retail mass digital lending perspective. Do we have any data that shows whether the costs have reduced, and if they have reduced, how has that impacted on the communities?
Okay.
Yeah.
We'll come to that. I'll ask that we finish with the feedback forms first, and then we'll close with that. Yeah. So maybe just 1 more minute, and then... We'll start once Bloom stops writing. Yeah, so you are my...
So please fill out your forms. Once done, we can go to the next set of questions.
Yeah, I think we're done.
We did digitally.
Yes. So I'll want to come back to a question, and then to hers, and then we'll go back to the screen.
Okay, thank you for this opportunity. Good afternoon. So my question is, just thinking about moving from the theoretical to practical, what is the balance between flexibility and just, regulation and standardization of policy? Because listening to the first set of panelists, I got the sense that there has to be a reason why more fintechs and maybe third parties are finding it easier to work with, for example, Safaricom. And it's obviously, it goes beyond the fact that they have a wider reach. There has to be something about flexibility in that. Then when I listened to the second panel, there was that willingness issue that came up. So I'm thinking for open finance to accelerate in Kenya, we need a balance, and what would that balance be between flexibility and just standardizing the regulatory processes and policies? And secondly, data cleanup. She brought up a point about the kind of data she gave to the bank when she was 18. Is it still relevant currently? And if that is the kind of data that banks are sharing, are we having a process for cleanup? If my telephone number when I was 18 years has changed, or my email address can no longer be accessed, then what does the regulator put in place to make sure that data is ever so often cleaned up? Then on the third case that he brought up about the consumer being settled even during disputes. This is just a food for thought. Would there be maybe an insurance or a pool for all the players in the market where there are funds to settle the consumer while they do their back and forth on who is liable for the risk? Thank you.
Thank you. I think you are referring to some bit of design elements. Ref, can you take both our questions and the other lady's question, if you can? Yeah.
Sure. So on the impact evidence with credit, yeah, it's nice. There's now starting to emerge data. So I shared in one of the first slides, Brazil, several banks and others have shared how they've been able to reduce by several days, the time to originate loans. That's actually true in India as well. There's been a reduction in days to originate, or even in India from days to, minutes in some cases. And there's been a reduced interest rates, right? One of the banks in Brazil, I forget the number I had in the slide, but they calculated just how much they'd reduced interest charges. I think it was 1.4 million US dollars equivalent of total lending costs passed on to the consumers through open finance. Why don't I'm making a note of that in the deck, I'll embed a new slide with, and it's going to be case studies from different countries. I want to pitch something, I wouldn't be a good research nerd if I didn't. I think when we launch an open finance in Kenya, we should have a robust impact evaluation, because you have incredible research talent in Kenya, and something like the FinAccess survey, they use that all the time to do follow-up studies. You could create a panel of Kenyans and just see, once open finance launches, how does their financial behavior differ? What if we did financial diaries with the subset across the country? Because I think Kenya could do the level of impact evaluation that no one has done yet. I would love to see that. Then I think about balancing flexibility and standardization. I feel like this isn't maybe a direct answer, but one thing for like a first phase of open finance, in my opinion, is we just start with the minimum viable solution, right? Like, I think maybe it seems like if we just improved some KYC, payments, banking, and digital lending, data sharing, that alone would be transformative. And that maybe if we had a really simple and fairly restricted ecosystem where all it's saying is that that data must be shared at the consumer's discretion. Here's how it's shared. Here's how long you can keep it. And then everything else, like we don't even necessarily need to set up premium API rules or things yet. We could leave that all to the side and just show how better data gets some of the job done, leave alternative to data to the side. I don't think I directly answer your question because I don't really know the answer, but that'd be my process is like, let's just start with the simple thing we can do by end 2026 is what I'm thinking.
Thank you.
Yeah.
Can we put up the slides, please? Next one. Next. Yeah, so I want to reflect on these 4 questions. So there are people, obviously, in this room that have been thinking about this topic for a much longer time. But I think when we move towards implementation, it's the people who are sitting down that will be more important for that process. So I'm curious to know whether there is, when you walked in here, has your perception on this topic changed? Anyone wants to have a go at the first one? Perception, knowledge, was it useful? Any takers?
This is the part where you work for your lunch. There we go.
Thank you. My name is James Ogata from the Busara Center. I think from a knowledge perspective is an appreciation of the stakeholder interests and how the North Star is that there's a common interest as far as the benefits that can be accrued from the perspective of lenders and also for the regulators for a more robust ecosystem. But at the beginning, it may be challenging because there may be a scenario where everybody is waiting for the critical mass to develop for them to jump in. So from the discussions that we've had today and the content that's been shared, I think that as the first hurdle helps with an appreciation of what it would take and the level of collaboration it would take between different actors to make this a reality. Thank you.
Okay. Thanks, James. Anyone else? And okay, sure.
For me, my name is David Karaoke. I'm a student from Strathmore University. Up to today, my main interaction with open finance is in research and theory. I think today has been really helpful and very good for me personally to see how practical it actually be and how possible it is to apply that theory that we're all researching and all learning about in our market or in Kenya specifically. And I'm very grateful for you guys for organizing all of this and allowing us to come and see what exactly is happening on the ground. Yeah,
thanks for that. And that's really a challenge for us to move this from concept to reality. I think just reflecting on a couple of weeks back, we were in some policy discussions and there was one policymaker that was really challenging us to show him a practical use case, like what does this mean for this market? And I think the challenge is for us to progress from here to actually see things that are happening in the market. Anyone else with some reflections? Yep.
I'll be happy to share my global perspective. We are working on a software platform that will be integrated with a lot of stock exchanges globally. And I'll give you an example. Perhaps one is in Mauritius, Kenya, South Africa, India, Malaysia, Dubai, US, or Europe. Everything we talked about today challenged me to think broadly. Why? Because our software will be integrated with the local brokers, obviously through an API. That said, at the end of the day, whose data are we using? Theirs? Or
ask you to input the amounts back into their verification platform. But there's another way that has been enabled through Open Finance where there's a third party that actually does that verification. So they have authorization to, within certain safeguards, to go into your account and actually verify that this account actually exists in this bank, and you can link this bank account to this brokerage account. So there's a use case there if you're thinking of going into investments in other markets. Our second bullet question, maybe that just put that up. Is there anything that has been said today that you don't disagree with, that you think we are way off? This was meant to be a validation workshop, so we are hoping that through this process you're validating some of the insights that came out of our initial discussions with you. There is a challenge, and not challenge really. Do you want to share? Okay.
Or forever hold your silence. No voices of dissent? The brave one.
Well, so I'm not really pushing back on an assertion, but the question that was put to the second panel on pricing, I'm not sure whether they were being politically correct, because what I heard is what they are willing to receive in terms of the data they're willing to receive, right? But what data are they willing to share? And the second one is on pricing. So we've talked about different business models. We've said we've heard of people or entities that have put in money to collect this data. That is not their data, but they have put in money. So I can sense a bit of reluctance to share data that guys have collected. But then they're also saying they're willing to share the data without charging for it. So I don't know.
Yes,
I mean, as PesaLink, we don't collect any data.
Yeah.
so I'm actually very curious to hear, honestly, are they willing to share that data without charging?
Okay.
Yeah.
And pricing is always going to be one of those contentious issues.
Yes.
Anyone else agrees with that proposition?
Collected using resources, it's stored somewhere and maintained using resources. I want to imagine they would want to at least recoup what they've spent, their expense on that data management. So whatever the tariffs that they'll come up with to recoup at least the baseline of expense, I think, yes, they were being politically correct.
Being political, yeah?
Yeah.
Somebody here at the back itching to say something from the expression on her face.
I'm sorry I wasn't there in the morning session, but based on what she's saying and what she has said, truth be told, if guys are in business, it's an investment. So if you've collected data and it's so expensive to even store data, look at your mobile phone and the Google. Every day it's prompting you to buy extra storage. So if you look at the cost of the rails, the security, the governance, I am not sure, and that's why we have to go back to who will help us run this initiative in a way that it can be scaled and utilized. It has to be a public utility to standardize and get all info, because then everybody will be willing to come on board. Otherwise, from what I've seen, nobody is willing to give their data. Nobody. It's at a premium. And data is a new currency.
Of course. On our last point of discussion, is there anyone that should have been in the room today that isn't here that we should reach out to? You need a mic here. You can.
Like I said, I think the challenge is the regulators are usually very shy. Yeah. I'll be very honest. With you. I've been involved in two initiatives now. The issue of credit ratings and scores and the issue of unclaimed financial assets. To get a regulator into this room with all these people, is going to be a tall order. So I don't know how you're going to do it, but my approach would be that if you are to push the Open Finance Initiative seriously, you need to find a way to get all the financial service regulators seated somewhere for you to ask them questions and for them to be willing to sit with, not all of us, but with a select few. And I'm saying a select few because I know how shy these people are. Yeah. If you've worked in government or worked with any government official, they will not give you any official position from their mouth. They will not do it. So you need to find a way to work with them, to get them into a room for them to give you their perspective. That's number one. Number two.
So on that one, stay tuned.
Number two, you have to use the big stick. So you will do the formal thing and write to the central bank and write to SASRA and write to CMA. But ultimately, you need to go to the parent
ministry.
You have to go to the CS and the PS. Because when the instructions come from there, you will see them here. Yeah. But if it is voluntary, the way we have come, and we have had a good time, and we've been, walisema tufungue roho itoke.
Yes.
Gonna be very difficult. So for them to get into this room, it will be possible.
Sure. Lemuel Mangla here. So in terms of whom else would be in the room, one, I would appreciate if we got sector-specific associations. We talked about data standardization, and the best placed people to actually bring out those sets of standards would be either the associations for those specific sectors, because when you talk open finance, there's the financial aspect, but now we also need to include other sectors as well for us to have anything that's meaningful on that front. Thank you.
Thanks, Lemon.
Just to add on that, I don't think the conversation is complete without including the consumer. Yeah, so we are mentioning everybody else who is the service provider, but have we looked at the perspective of the consumer? I know it's not easy to bring or to have every one of the consumer sectors represented, but we could even go the way of mass surveying to just ask some questions and get feedback so that then we can analyze that and see what the actual user insight is.
Yeah, that's a very good point, because at the end of it all, it might make sense for that consumer. Yeah, I agree with you. Any last takers? Otherwise, I'll want to hand it back. I hope that our note takers captured all that.
Are we all good?
You're good.
Thank you, Francis.
That's my part, thank you.
Yeah?
Yep.
So that essentially brings us to the end of our session. Yeah, please give him a hand. So, ladies and gentlemen, I think as we bring this workshop to a close, a few things are clear. Open finance is not a nice to have. It's a necessity for the future of Kenya's financial sector. Collaboration, trust, and consumer protection will be the pillars of this journey. I'd like to thank our hosts at AFIC and their partners FSD Kenya and the Kenyan Bankers Association for driving this important conversation. To all the speakers, panelists, and participants, your insights have been invaluable. Let's carry this momentum forward as we shape the future of digital finance in Kenya. Thank you and have a great afternoon. We do have one last thing, which is the video production team would like to get some additional insights. They're asking that if you are willing to, they'll be setting up the camera and you'll be able to give them a few sound bites and so forth. Also, I'm getting a prompt there from the back. Again, the Menti survey that is in front of you using the QR code. Maybe we can also have it at the top. Please do complete those last 5 questions It would be highly appreciated, as those insights will be used to provide a more complete picture of the situation on the ground. So thank you very much. I believe we can allow you to leave at leisure unless there's somebody from AFIC who maybe would like to give some additional closing remarks. Are we good? Anyone from AFIC, or maybe Raise? Anything from you?
Yeah, I mean, well worth the trip. And it's very exciting. This is my work, but this is also very important personally to me because I was a Kenyan financial consumer for quite some time. My mtoto was born in Kenya, so Kenya always has a special place in my heart. And like Francis said, we've been climbing up this hill since 2018, and it feels like we are now reaching the summit where we can see what lays out ahead of us. And so thank you all. You brought such dynamic energy today, incredible insights. And so I'm very appreciative just personally, and I can turn it to, I don't know if Afik or anyone wants to say anything. Yes.
Good afternoon. I'll confess, when this project was put together, the board decided to monopolize me. Those of you who went to Kenyan high schools, you know what that means, yeah? Get that person who's the youngest in the team and get her to do all the lifting. But it's been an absolute pleasure to do this. So I'm Rosemary Koech Kimwatu. I'm the Director Legal at AFIC. This is something that's core to our hearts because we believe that financial services in this country, we led. We were fast movers. We showed the world how to move money using an SMS. And it was trusted currency. And we've gone so far. However, I feel that we've plateaued. And I think during the panel that I had, you could hear the tensions between the fintechs and the banks. What can we do to do it better? Hence why this came together. We rewrite the rules of how we share data and see if that helps jolt our system. As Munyi said, we're at 10% payments online. We're still 90% cash. So we're not each other's enemy. Cash is the enemy. Wrong or right? And for me, even as a policy lawyer, I believe that it will shed so much light into the darkness that is the financial services system in this country. But of course, there's the guy who wrote the concept note, the guy who's passionate about this, and there's no free lunch, so you have to say something, Munyi. He's our Secretary General, so I'm reverse monolozing you. Guys, can you watch me delegating upwards? Yes, this is it. Cheer me on as he comes. Congratulations, Munyi.
Okay, good afternoon. I didn't expect to speak, but anyway, this is a journey that has been going on, I think, probably 2 years plus. Yeah. And like we said, as an association, we're very passionate about policy. And one of the reasons why we put together the association is because we said we need to be part of the conversation, right? Every other year, you have finance bills that are passed. Then we read, you see things that are impacting the industry. And then you start making a lot of noise about it. So we said, let's change the narrative. Let's be part of the process that produces those finance bills, right? And let's be part of the process that produces the policy that is used to regulate our industry. And therefore, this conversation started 2+ years ago. As she said, she leads our policy and engagement, I would call it one of our objectives as AFIC. And we said we cannot do this together. So we reached out to Kenya Bankers, and Fidelis has been really amazing partnering with us. And then we looked around and said, which are those organizations that are also really passionate about, finance, the digital economy? And we ended up speaking to FSD. And as you well know, a lot of the work they've done, one of which is what the former CBK governor launched, which is a digital economic strategy, which is led by FSD as well. So we came together, signed an MOU, agreed on the output, and then in there we started engaging stakeholders. We engaged the National Treasury, we engaged CBK, we engaged microfinance insurance and told them to come on board. And then this is a culmination of all these conversations. And I remember being in a room on a certain afternoon with people from FSD, and I said, hey, we have this vision, And would you guys come on board and support us in terms of funding the project team? And FSD were good enough to put in some resources. So all this happening is actually because we've been financed and resourced by FSD. So I'd really want to appreciate FSD for funding this. Yeah, and that was the first time I ever did an application for grant. And I'm glad I passed the audit. So that's a feather on my cap. But I think for me, even as a fintech player, as an agri-tech player, this is really important for me as in the industry. And I was speaking to Rosemary outside there, and I was telling her, for example, in the agriculture sector, I don't know if you guys know, but the government has actually already digitized most of smallholder farmers in Kenya. There's actually a national database of farmers in Kenya. They can tell you where you live, your acreage, number of cows, number of chicken, and whatever it is. So what now they're trying to do is, because that is what you call static data, what they're now trying to do is, they're trying to get now the dynamic data. What do they transact? What do they produce? How much do they get paid? How much is lost and all that? And I'm part of the team that's helping the government to do this. So that is where my comments are coming from. Because I'm wondering, as we speak about this, all that data that sits in that database at KALRO, are we thinking of leveraging things like that? Because we use financial data for scoring. They have a lot of data that can profile a farmer better, behavioral data, output data. How can you leverage on these pieces of data to make better decisions about this very huge part of our economy? But I think for me, today is just to thank you all for making time. I know on a whole Wednesday, spending the whole day here, it's quite a sacrifice, it's an investment on your part. We really appreciate your presence here, we really appreciate your input. We will be getting back to you on how we move from here. But I think ultimately for me, if I was asked, if we're able to take this all the way into policy formulation, I think we'll have done good for our country and for all of us. So for me, thank you very much for being here, and let's continue engaging. Thank you.
Right, so thank you very much. And I think essentially that brings us to a close of this wonderful, wonderful workshop. I think it's been excellent. Thank you for all your contributions, your involvement. Again, we still have the mentee form. I'll keep insisting if you can fill it out, use the QR code. You're more than free to leave at leisure, but also the team at the back, the media team, would like to take some videos and reflections for those of you who are willing to share. So thank you so much, and we hope the rest of your day goes well.